markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all advancing. In fact, we are trading very close to session highs right now, holding on to gains. S&P up 34, up by about 0.8%. Could be on track for another winning week for the U.S. stock market. If that happens, it would be 6 in a row. We've got the Dow up 94 points, up by about 0.3%. NASDAQ Composite Index up 1.3%. The NASDAQ 100 Index up by 1.4%. 10-year yield, 4.11%. We have got the 2-year at 4.57%. Gold up 0.2% at $2,030 the ounce, while West Texas Intermediate crude is up 0.4%, 69.64 a barrel. Initial jobless claims ticked higher last week, rising to 220,000, while the total number of Americans collecting unemployment aid declined. And with more on the numbers, here's Bloomberg's Vinny Del Giudice.
Today's calming claims data precede Friday's jobs report, which is forecast to show hiring picked up in November, while the U.S. unemployment rate held at 3.9%, the highest since January 2022. Such results, along with upcoming inflation data, would probably provide reason for the Federal Reserve to hold interest rates steady next week. Vinny Del Giudice, Bloomberg Radio.
Alphabet shares are jumping by 5.3% as the release of the company's Gemini AI model eases concerns about its position within the highly competitive market for artificial intelligence. Also rallying today, we've got Advanced Micro Devices shares introducing that new chip. We have got Advanced Micro Devices up by about 8.4%. Again, recapping, stocks are higher. S&P up 36, gain right now of 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Quite a walk back we are witnessing from the presidents of universities, the three of them who came here to Washington to testify a couple days ago about anti-Semitism on campus, generating some painful, tortured exchanges about free speech versus hate speech. And the one that appears to be going down on the books was the back and forth with Elise Stefanik. We played it for you already. Elise Stefanik and Liz McGill of UPenn, whether or not if somebody called for genocide against Jews, whether that would in fact break the school's code of conduct. She kind of smiled her way through it and had a very difficult time generating a yes or a no as she tried to delineate between free speech and the actions that people might take based on that speech. Splitting hairs didn't go over well. Major donors opposed immediately what they heard, pulled back money. It became a social media doom scroll for all three schools. And Liz McGill at UPenn is out with her own apology video of sorts today to try to clean up what she said. Here she is.
There was a moment during yesterday's congressional hearing on anti-Semitism when I was asked if a call for the genocide of Jewish people on our campus would violate our policies. In that moment, I was focused on our university's longstanding policies aligned with the U.S. Constitution, which say that speech alone is not punishable. I was not focused on, but I should have been, the irrefutable fact that a call for genocide of Jewish people is a call for some of the most terrible violence human beings can perpetrate. It's evil, plain and simple.
Imagine if she had said that in the hearing. Now, we didn't get a video, at least that I've seen yet, from Harvard. But President Gay issues a statement saying there are some who have confused a right to free expression with the idea that Harvard will condone calls for violence against Jewish students. Let me be clear. She writes, calls for violence or genocide against the Jewish community or any religious or ethnic community will not be tolerated. So reassemble our panel for their take on the course this is taking here. Rick Davis and Jeannie Shanzano are with us. To be clear, I shouldn't have lumped MIT into the lot. Nobody was happy with any of them, but I haven't seen any cleanup from MIT. I don't know that there was anything to clean up here. Jeannie, this one hits close to home for you. You work on a campus and you have a good sense of how progressives feel about this. Is this a necessary exercise? Will this save their jobs and reputations now?
You know, I don't know. I mean, we heard, you know, the governor Shapiro of Pennsylvania calling for reconsideration of the future of the president of Penn. You know, I don't know how this is going to play at their home institutions, but I do think the response publicly is understandable. You know, you have university leaders of the most impressive universities, quite frankly, in the world, not just in the United States, having difficulty being clear morally about calls for genocide. And that is a stunning, stunning reality. So it is understandable the reaction of alums, the reaction of donors, the reaction of students, administrators, faculty, people in general. And it comes at a really tough time in higher ed. You know, obviously, public opinion in terms of support for and belief in these institutions has plummeted, just as it is in all aspects of institutions in the U.S. So it is a really difficult time. And, you know, when you reflect back, and I did look back at this testimony, you feel to a certain extent, and I was glad McGill came out and said that, you feel to a certain extent like they were trained, they were instructed by lawyers for the institutions to respond in the way that they did. And they went there and they made statements that really are confounding when you think about the very basic question of a call for genocide and how any of us or any institution should respond. So it was deeply troubling and understandable, the response.
Well, Liz McGill was kind of smirking through that exchange with Elise Stefanik, Rick, and I think for a lot of people to be on the outrage of the matter of calling for genocide against a group of people, it smacked of arrogance. Does this straight-faced cleanup help?
No, I think this actually makes it worse, because it actually shows that she recognizes how horrible her answers were to Elise Stefanik when she was in the docket at the House hearing. So, yeah, I mean, and besides, when you look at the video of that, it almost looks like she's a POW being forced to, you know, admit to, you know, loving her captors. I mean, it's like I was trying to notice whether or not her eyelashes were actually blinking SOS, right? I mean, like, she was obviously forced to get out there and clean it up. Look, this was a huge failure of these presidents of these institutions who showed utter disregard for the norms of our society. And the idea that they wanted to hide under the Constitution of the United States in a process of administering some kinds of rules for their universities was part of the insult. I mean, the White House condemned this. Their donors are condemning it.
You're right.
I can't wait to see what Governor Shapiro says today when he called an emergency board meeting, and which is very extraordinary for a private university in Pennsylvania. And I would be shocked that any one of them lasts to the end of the week as in their current position.
Wow. Just about a minute left, Jeannie. What must it be like on campus today at either of these institutions?
Yeah, I mean, it's a very, very difficult time. You know, the reality is we can protect free speech and expression and the safety of all of our members and condemn hate speech all at the same time. And the idea these presidents couldn't put that together is beyond troubling. I also am troubled by the lack of seriousness on the part of many of these members of Congress. Their insistence on entertaining and making videos for their campaigns is also troubling. We should have a real conversation about this, and that didn't come out of this hearing either. So to me, it was shameful all around.
Well, I can only imagine the chatter that's taken place in the teachers' lounges, in the cafeteria, in the dormitories, and I bet it's a major distraction. If this winds up by the end of the week, as Rick says, it's going to be quite a story to look back on and unpack. Rick Davis and Jeannie Shanzano are not done. We have some final thoughts from our panel straight ahead. Next hour, our conversation with Congressman French Hill on the new letter from the Speaker. There will be no more CRs. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. JetBlue Airways shares up 15% right now. JetBlue is boosting its full-year financial outlook, citing better-than-expected bookings and operational performance this fall. The airline did say in a securities filing this morning it expects an adjusted loss of 40 to 50 cents a share for 2023 and revenue growth of 4 to 5%. Now, that compared with an earlier forecast for an adjusted loss of 45 cents to 65 cents and for revenue gains of 3 to 5%. Again, JetBlue Airways shares, they're up now by 15%. GameStop up 2.4%. The video game retailer did report third quarter net sales that missed estimates. And with more on that story, here's Bloomberg's Tom Busby.
Charlie, the Grapevine, Texas-based company, posted sales of $1.08 billion in its fiscal third quarter. That's a 9% decline from the same period a year ago. Analysts were projecting $1.18 billion based on estimates compiled by Bloomberg. Now, sales fell in all three of GameStop's major categories: software, hardware, and collectibles. The company struggling to find its footing after the bulk of video game sales shifted to digital marketplaces. GameStop has closed over 1,000 stores in recent years. Charlie?
And that's Tom Busby reporting again. GameStop trading higher right now by just about 2.6%. Dollar General says deflation is beginning to show up in discretionary categories, and in some cases, the company plans to pass that on to customers. Those are our top business stories, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We're live from Washington, where Kaylee Lyons joins the conversation in just 5 minutes, and we'll have some final thoughts with Rick and Jeannie ahead, too, after we check world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Hey, Joe. House members voted again today to punish one of their own, targeting Democratic Congressman Jamal Bowman.
Representative Jamal Bowman forthwith present himself in the well of the House of Representatives for the pronouncement of censure, and that Representative Jamal Bowman be censured with the public reading of this resolution by the Speaker.
Bowman was censured for triggering a fire alarm in one of the U.S. Capitol office buildings back in September when the chamber was in session. Since January, the chamber has seen the removal of a member from a committee assignment, the first ouster of a speaker in history, and just last week, the expulsion of a lawmaker for only the third time since the Civil War. House Republicans are also taking a step forward in a push to impeach President Biden on charges related to his family's business dealings. We get the latest on that from Bloomberg's Billy House.
House Republicans filed a resolution to authorize an impeachment inquiry, or to continue that, and this kind of makes it official. Previous Speaker McCarthy had launched investigations, but had not formally done so through legislation.
Bloomberg's Billy House on Capitol Hill reports there's very little wiggle room for the GOP on this one. Republicans can only lose 3 votes if all Democrats oppose the inquiry. The vote is expected next week. A Texas judge is granting permission for a pregnant woman to undergo an abortion in a challenge to the state's strict abortion ban. The woman received a diagnosis last week that determined her unborn child has an abnormality that leaves no chance of survival. Her doctor also says carrying the baby to term would jeopardize her health and her ability to have more children in the future. The decision is now likely to be appealed by the state. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Back to you, Joe.
All right, Nancy, thank you. Not great news for Eric Adams. As we read the headline in the New York Times, this is rough. Adams' approval rating sinks to lowest for any New York City mayor since 1996. How about that? And, you know, because 1996, that's not a coincidence. That's when Quinnipiac University started surveying the city. So this is the history of the poll. Remembering, he's been in a bit of trouble lately. The approval rating, as I read, the lowest again for any New York City mayor since 1996. Reveals the extent of the political damage he suffered in recent weeks. The FBI seized his phones. A woman filed a legal claim accusing him of sexual assault. And he made some rather unpopular budget cuts to police, schools, and libraries. Not that he's worried.
All I know is all my haters become my waiters when I sit down at the table of success.
Well, that was back in August, but I do remember that moment. He has fun at the podium. Final thoughts from Rick and Jeannie. Jeannie, that's home for you. Rick, you spent a lot of time in New York. Is Eric Adams about to lose his job, Jeannie?
He might be, you know, very bad day to be a New York poll between Jamal Bowman and Eric Adams. These are tough times in New York to be a politician. Yeah, there was not one good sign in that poll. And by the way, I have no idea what that clip you just played. What did he mean? Can be my waiters. I'm so confused. You got me on that
His
one.
haters. His haters.
Oh,
his waiters.
I'm trying.
Yeah, I don't. Little rhyming. Rick, he's making Mayor de Blasio look good. Should Andrew Cuomo actually run?
Yeah, I think Andrew Cuomo is going to be heartened by this. In fact, we knew that a month ago, Cuomo was running around New York with a poll saying that he could be the next mayor of New York. And I guess it probably was just like this Quinnipiac, because there's only one thing in this that screams out, and that is that Eric Adams isn't going to be the next mayor of New York City.
I'm surprised we don't get a statement from the White House on this. You think we've got a low approval rating? Rick and Jeannie, thank you as always for Smart Talk, our signature panel for a reason. They're both Bloomberg Politics contributors. walking us through breaking news every day here in Washington. We've got a lot ahead, including our conversation with Congressman French Hill. Kaylee will be here in a minute. Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover them.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The Speaker of the House tells the White House no more CRs. Welcome to Hour 2 of Sound On as Mike Johnson sends a Dear Colleague letter to President Biden saying he will not entertain the idea of another stopgap budget deal, putting more pressure on lawmakers here to avoid a shutdown starting as early as next month. We're going to be joined ahead by Congressman French Hill, the Republican from Arkansas, with us. Also actively pushing to renew the FISA 702 government surveillance program, where there does appear to be a deal. We'll talk to him about it. And we'll recover from another debate night with Nancy Cook, Bloomberg Politics reporter. With more as well, we'll get an update on funding for Ukraine and Israel on Capitol Hill. Zach Cohen of Bloomberg Government will join us as well. So let's get rolling here for Hour 2 with a look at Wall Street. Charlie Pellet has that in New York.
And we do begin with the developing story headline right off of the Bloomberg Professional Service. Carlyle's David Rubenstein said to be in talks to acquire the Baltimore Orioles. That's the headline right now. More details as they become available. Stocks are moving higher, holding on to gains. We are trading at or near session highs right now. 37-point jump for the S&P 500 index, up 0.8%. We have got the Dow up now by 95 points, up 0.3%. NASDAQ up 189, up by 1.3%. 10-year yield 4.11%. The 2-year 4.57%. Gold up 0.2% to 2030, and West Texas Intermediate crude up 0.3%, 69.55 for a barrel of WTI. Bitcoin, meanwhile, down 1.2%, 43,328 right now on Bitcoin. Traders are brushing off any jitters surrounding the outlook for tomorrow morning's jobs report. 186,000 is the estimate for the non-farm payrolls number. So what would be bad news for the market? That question this morning on surveillance for Jeff Sherman, Deputy Chief Investment Officer at Double Line Capital.
Yeah, I think it's sub 100. You know, I think if you would get less than 100,000 or so, I mean, definitely if you get like something like 50 or something, that would be really negative. And I think you could really see it's kind of test the 200-day moving average in the 10-year, which is closer to 4%. But in general, if you got something like a 225, 250, I think rates back up again. And then the question becomes, do stocks like it or not?
And, of course, the number drops 8:30 a.m. Wall Street time. We got you covered on the jobs report tomorrow. Complete reaction and analysis throughout the day once we get that number. Right now, the 10-year, 4.11%. BlackRock CEO Larry Fink says Republican presidential candidates are spreading misinformation about the world's largest asset manager, declaring their preoccupation with the firm, quote, a sad commentary on the state of American politics. BlackRock shares, they're up today by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thank you. Welcome to Hour 2 of Bloomberg Sound On. I'm Joe Matthew in Washington as we join hands with Kaylee Lines. Each day at this time in Hour 2 of Sound On. Great to see you, Kaylee. I know you've been busy all day here, but you're the one actually who brought to us the Dear Colleague letter.
Ah, yes.
I was lamenting last hour. I don't know what the congressman thinks about this, but I learned early to beware the Dear Colleague letter. It's typically not followed by anything good, as opposed to the Dear Kaylee letter that you might enjoy reading. When you see Dear Colleague, I don't know. And in this case, you know, it wasn't Dear Joe.
No.
It did show up at the White House earlier today. And the message is clear, right? No more CRs.
Yeah, I mean, the message is a number of things. First, he talks about the deal they reached with the NDAA and the extension of FISA until April. It looks like that's going to head to the floor next week. Then he goes on to talk about, you know, we have a lot of other negotiations on appropriations that we need to get through. And the quote, Joe, is, "I do not intend to have the House consider any further short-term extensions." So no more CRs.
No more CRs. And he's said that before.
Yes.
You and I flipped through the archive for a minute. This is the 14th of November. Speaker Mike
The
Johnson.
innovation that we've created, this new vehicle that the Democrats initially said was so frightening, actually turns out to be something that will change the way we do this. And so this is a very different situation. We're taking this into the new year to finish the process and get back to the original way that this is supposed to work. And by the way, the House Republican Conference is committed to never being in this situation again. I'm done with short-term CRs. We're resolved. So what that means is you're going to see in the beginning of this next year, we'll be walking and chewing gum at the same time. We're going to get the appropriations process running on time as it's supposed to be under law.
Okay, pretty consistent, I think, right? No more CRs.
Yeah.
And the idea was that there might be enough time to get spending bills together and move maybe some minibus legislation to get things funded in time for this staggered CR to run out.
Yeah, in time being either January 19th or February 2nd. I thought what was interesting, that, Joe, is that after in this letter he writes that there will be no more short-term extensions, he goes on to say, the Fiscal Responsibility Act is the law of the land, supported by over 2/3 of the conference, and the framework from which we are negotiating. That would be the debt ceiling deal from months ago.
Yes.
That it seemed everyone didn't want to stick to, but now maybe we're back to sticking to it.
I get so confused at this part of the conversation. I shouldn't even be here. But Congressman French Hill is joining live from Capitol Hill in the House of Representatives, the gentleman from Arkansas. It's good to see you, Congressman. Boy, we could have avoided a lot of trouble if we had just done what was hammered out in the debt ceiling deal. Do you still think that on a daily basis?
More than a daily basis, maybe an hourly basis.
All day.
We burned through 6 months arguing that the Fiscal Responsibility Act levels negotiated by Kevin McCarthy, then Speaker, and Joe Biden, President, somehow weren't good enough. They cut $1 trillion of spending, lower the baseline year over year, and have all these other reforms that we've talked about many times this year. So it's frustrating to suddenly see that that's quote unquote the law of the land. But I'm glad to see the Speaker say that in his letter, because that means that is the top line number for completing the FY24 appropriations bills before January 19th and February 2nd.
Okay, so does reading that it is the law of the land reduce the odds in your mind that part of the government will shut down after that date, Congressman?
I think it reduces the odds if the Senate steps up and starts some informal negotiations on 2, 3, or 4 minibuses, as you described, because that's where the House is. We don't want one big omni. We've made that clear. We have 2 different dates. We broke the 2 sets of appropriations bills into 2 different dates to help the Senate out, to give them a little direction. But they could break it down further if they wanted to. And I hope that speeds the process to a conclusion, because the biggest issue, of course, is spending. But now the House is in a position to argue with our Senate colleagues. We want these policies versus those policies, and that work takes time, so they need to get after it.
Boy, it's been suggested on the program today, Congressman, that the Speaker had to send that letter as a message to his own conference, because he's got a lot of worried members on his hands. I think he might work with Democrats, do another CR, get everybody all worked up and angry again at the beginning of the new year, that it was more for his own conference, your conference, than it was for the White House. What do you think? Will this calm some minds?
Well, it certainly gives some clarity. Just a little over a week ago, the House Freedom Caucus, led by Scott Perry of Pennsylvania, voted or announced that they, as a group, supported those Fiscal Responsibility Act levels. This is what we've had trouble with all year. It's what caused Kevin McCarthy his loss of his speaker's chair. So the bottom line is we've known this for several days now, but this is the first time that the speaker has said that those FRA levels are, in fact, the level for the appropriations bill. So, let's get going is what I would say. We've debated this for 6 months now fully. We know every intimate detail in these appropriations bills. Let's bring them to a conclusion.
Well, Congressman, speaking of conclusions, it's not just the appropriations bills that were addressed in Speaker Johnson's letter. There is also the matter of supplemental security funding. We, of course, saw that quote-unquote test vote failing in the Senate today. The Speaker pointed to that, saying it demonstrated there is no path forward on Ukraine funding without meaningful transformative change in policy at our southern border. Congressman, how do you think this gets solved, that these two issues ultimately are reconciled? And is there any chance that it happens next week?
Well, in my personal view, I think it's possible, but a low probability event that it gets done next week. But I want to emphasize that it is possible. That test vote in the Senate was important. House Republicans under both Speaker McCarthy and Speaker Johnson have made clear since September that we think serious policy reform on the border is critical. The president's supplemental appropriation only supported more money for things related to the border. House Republicans, and now as you see, Senate Republicans want actually policy reforms in addition to kind of any kind of spending number. And I think it will be linked to the Ukraine supplemental. In the meantime, the committees, Intelligence Committee, Foreign Affairs Committee, House Armed Services Committees, and others have been parsing and meeting with the Office of Management and Budget and their colleagues on the president's request. So that work has continued apace in both the Senate and the House. But in my view, I think it's not a high probability event next week, but could be possible if leadership on both sides of the Capitol gets serious.
That'd be a big deal, Kayleigh, if that emerged. Congressman, we've had a bit of a conversation going with you the past few weeks about FISA 702 and the renewal of this warrantless spying program that is focused on bad actors abroad, but frequently scoops up communications with Americans, which is what makes it controversial. You've been pushing for its renewal. It appears there is an agreement now, and you can tell us about it, I'm sure, because I think you were part of it, for a short-term extension to bring it to April. It would be part of, you've got a vehicle now, the NDAA. Will it move forward in its current form, or will there be privacy protections added to it? Congressman, what does it look like?
Well, in the NDAA, the only provision is to not let Section 702, which is the surveillance of foreign nationals using data from big data companies like our telecommunications companies. That's what I did not want to see expire at 12/31. With that said, the important work that's being done in the House Judiciary Committee and House Intelligence Committee is a complete reform of the Foreign Intelligence Surveillance Act, the Foreign Intelligence Surveillance Court, and the process used by the FBI. All this is being, I would use the word radically improved and reformed in light of the catastrophic behavior by the FBI in and around Hillary Clinton and Donald Trump's campaign, the Carter Page matter, and everything that people really are very well aware of, including FBI agents querying members of Congress and using 702 surveillance authority on Americans without following the existing rules. So, Joe, this is a major change. I want to see these reforms passed as well. If we can do that next week, which we're going to try to in the House, that would be good to get both the reforms and the extension of 702. I think that would please members of Congress mightily and would be better than a simple extension of 702 until April that's contained in the National Defense Authorization Bill.
Yeah, until April 19th. So if the reforms don't happen by that date, Congressman, would we then be looking at a FISA expiration that actually happens, if not December 31st, but then in April?
Yeah, look, Kayleigh, this is so important. I don't think you want to be debating something this technical and this important during a presidential election year. I mean, this is why I've been urging the House Intelligence and Judiciary Committees to get with the Speaker and get a plan to get these reforms approved by Congress. We have bicameral, that means the House and Senate, bipartisan, Democrats and Republicans support the House Intelligence version of these reforms, which contains the Judiciary Committee input. But we actually have a bicameral bill and a bipartisan bill that if it gets put on the floor, I think it will pass. And it has all the protections that we've talked about. plus the continued use of 702 against foreigners who are trying to traffic people or drugs across the southwest border, or hide hostages in Gaza, or attack military operations or American interests around the world. So it's an important surveillance tool. I think it's possible we get this done next week, and then we wouldn't have to worry about the April 19th date in the NDAA.
Spending time with Congressman French Hill, the Republican from Arkansas, with us on Bloomberg Sound On. Headline just crossed from Politico, Congressman. House panel, this would be education, to launch a probe into Harvard, MIT, Penn, after those three school presidents were, I guess, well, it was testimony, but one that outraged people around the country. We were talking about it a bit earlier when it comes to anti-Semitism on campus. Is that a probe that you support?
Look, I support tolerance on college campuses. When I was in college, we had on our campus people from Omar Bradley, the famous World War II general, to Stokely Carmichael. And we didn't have problems. People treated different voices on campus with a reception. There might be protesters, but they were heard. They were heard, and there was balance in that. And that's what we need on campus. And we don't need people supporting radical philosophies on campus and have the cover of the campus administration. That makes no sense. I love the approach that the University of Chicago has and my alma mater, Vanderbilt, have. There is no safe space. We support the First Amendment on our campuses, and we tolerate different viewpoints on our campuses. This has just become a mob scene on some campuses, and it's alarming to people, in addition to the hate speech that it contains.
Yeah. Well, while that hearing with those presidents, as Joe was referring to, got a lot of attention earlier this week, so too did a hearing yesterday, Congressman, of all the big bank CEOs. And I want to call attention in particular to one interaction that happened between Democratic Senator Elizabeth Warren of Massachusetts and JP Morgan CEO Jamie Dimon. It was on the subject of crypto, which I know as the chair of the Digital Assets Subcommittee you care very much about. Here's that exchange.
I've always been deeply opposed to crypto, Bitcoin, et cetera. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
Congressman, we only have 30 seconds left, but I have to get your response to Mr. Dimon's words.
Well, I welcome Jamie visiting with me so that I can inform him about how Congress has created a regulatory framework that resolves every issue he raised, both in the stablecoin legislation authored by Patrick McHenry and the bill that G.T. Thompson of Pennsylvania and I have written that directs the SEC, the bank regulators, and the CFTC, the Commodities Future Trading Commission, exactly how to regulate and protect consumers, investors, and innovators in and around digital assets, including Bitcoin and crypto. Good to be with you. Thanks.
Right, I hope. Yeah, thank you.
Nicely done, Congressman. If we could attend that meeting, we'd love to. We'll follow up with your office after that. Congressman French Hill, he's back with us on Bloomberg, the Republican from Arkansas, getting hour 2 rolling here. We covered a lot of ground. We'll have a lot more straight ahead. I'm Joe Matthew with Kaylee Lines. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all powering higher thanks to a rally in mega cap stocks. NASDAQ right now up 199 points. We'll round it up to 200, up by 1.4%. We've got the S&P up 39, higher by 0.9%. And the Dow Jones Industrial Average now up 104, higher by 0.3%. The Russell 2000 index of small cap shares up 0.7%. 10-year yield 4.11%, 2-year at 4.57%. Gold up $5 the ounce to $2,030. That is a gain of 0.2%, while West Texas Intermediate crude is up 0.1%, $69.49 a barrel. Oil stocks, they're lower. ExxonMobil down 0.7%, BP down 0.7 as well, Chevron lower by 0.1%. Crypto was one of a number of major issues that came up yesterday during the congressional testimony from bank executives. Jamie Dimon, CEO of JP Morgan Chase, said if he were the government, he'd shut down crypto if he had the power. Arkansas Congressman French Hill was a guest moments ago right here on Sound On, and he offered up this reaction to Dimon's remarks.
So I can inform him about how Congress has created a regulatory framework that resolves every issue he raised, both in the stablecoin legislation authored by Patrick McHenry and the bill that G.T. Thompson of Pennsylvania and I have written that directs the SEC, the bank regulators, and the CFTC, the Commodities Future Trading Commission, exactly how to regulate and protect consumers, investors, and innovators in and around digital assets, including Bitcoin and crypto.
And again, right now we have got Bitcoin down 1.4%, 43,229 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Keely Lines on Bloomberg Radio.
Kaylee, I was starting to get a little sad last night and kind of misty around 8 o'clock, thinking this was it. The last of the great debates of 2023 campaign cycle. Of course, we'll have real debates in 2024. But no, actually, it's emerged that there will be two more. Rick Davis predicted this. There'll be one right before Iowa, one right before New Hampshire. CNN gets them both.
Yep.
And there's great speculation that maybe actually Donald Trump shows up for one of these.
Which he didn't for the first four, including last night.
Right.
So.
And so he won them all by not showing up. That's the narrative, right?
Yes, I would say, though, that he is not seen as an exclusive winner. A winner, sure, but Nikki Haley, I think we've seen proven out, has just gained momentum with each debate performance. So we still have to see if it is true, still holds after last night, but that's been the pattern so far.
Didn't hear Donald Trump's name, I believe, until 17 minutes
when Chris Christie
into the show, when Chris Christie made a point of that. None of them really, other than Chris Christie, went after Donald Trump last night, reminding us that this really is, I guess, a race for second. Nancy Cook is with us today, I'm glad to say. She was watching, so you don't have to, and joins us now, Bloomberg politics reporter who lives and breathes the campaign trail. Is that the right narrative? Donald Trump won by not showing up, or was that an important night for Nikki Haley as the alternative?
I think it was an important night for Nikki Haley, and I think you saw the momentum that she really has been getting the last few weeks. There was a lot of evidence on that of that on stage because, you know, within the first 20 minutes of the debate, everyone was attacking her. It was like one big Nikki Haley pile on. And she even had that great line where she said, "I love the attention. I love all the attention, fellas." You know, she took it in stride, but really it was, you know, much more so than people attacking Trump, the front runner. They were trying to bring her down, and we saw everyone really doing that. And so I think it was evidence of her momentum. We did see her criticize Trump a little bit on the national debt, for instance. But as you said, Joe, it was really, you know, Chris Christie was the one who was really directly attacking Trump. He was the only one.
Oh, okay. Well, I guess we're having trouble hearing Nancy, which we'll fix in just a second here. You know, it's interesting when you consider the dynamic of four instead of five.
Yes.
And how much time that gave everyone to sort of focus attention on Nikki Haley, but also let some air in for her to make a point as well. I just don't know if it moved the needle.
Well, it may have just kept it status quo, right? Nikki Haley ascendant, Ron DeSantis struggling, Trump still so far out ahead that none of it really seems to matter. This really is just a race for second. I thought it was interesting, though. Nancy was just making the point to us that not many people went after Trump. It was only Chris Christie, really, who would directly do so.
Right.
Interestingly, Chris Christie also came to Nikki Haley's defense on occasion when she was targeted by Vivek Ramaswamy, who was essentially questioning her experience and intelligence to some degree. He said, I've known her. She's an intelligent woman. You basically shouldn't say those things. And I thought that was a really interesting moment.
It was suggested on Balance of Power last evening they may have had a little agreement going into this to look out for each other, or at least Chris Christie helped to defend her. Certainly, Vivek Ramaswamy had her number last night, just a piece of his attack on Nikki Haley that came complete with a prop. He held up a piece of paper, said Nikki equals corrupt.
We're talking about that transition. And Nikki Haley's campaign launch video sounded like a woke Dylan Mulvaney Bud Light ad talking about how she would kick in heels. At the first debate, she said that only a woman can get this job done. That's what she said. After the third debate, when I criticized Ronna McDaniel after 5 failed years of leadership of this party and criticized Nikki for her corrupt foreign dealings as a military contractor, she said that I have a woman problem. Nikki, I don't have a woman problem. You have a corruption problem. And I think that that's what people need to know. Nikki is corrupt. This is a woman who will send your kids to die so she can buy a bigger house.
All right, so let's bring Nancy Cook back into the conversation here. Nancy, was that the last stand for Vivek Ramaswamy? He brought forth conspiracy theories about not only January 6th, but 9/11 and the last, I think, half dozen elections in this country. Holding up the prop didn't seem to go over terribly well. What did he do to himself last night?
Well, I think that he just kept going with this narrative that people sort of view him as the obnoxious kid brother at this point of the Republican primary. You know, he really hasn't climbed in the polls.
Can he stay in this race?
Well, if he's willing to fund it, I think why not? You know, I could see him staying in for Iowa, New Hampshire. He has visited New Hampshire quite a bit, much more so than DeSantis. So I could see him staying in through that. I mean, I think at this point, really, he is gunning for some sort of TV contributorship or another book deal, or if there's a Republican president, a cabinet official.
Okay, and so that's there are other benefits to running, I suppose. He's been known to write a book, right? Maybe to your point, there's a TV show in there or something. He could work with George Santos, possibly, Dancing with the Stars. Where else should we go here? Because they covered a lot of ground last evening, and we haven't mentioned really the name Ron DeSantis, I think, yet, have we?
Yeah, that's very true. What's interesting is that Ron DeSantis went after Nikki Haley really hard, but specifically on the donor issue, Nancy. This I thought was just kind of juicy, if you will. She was getting targeted because big Wall Street, big money donors have been providing her support. And she said on multiple occasions, basically, you're just jealous because they used to support you and now they support me. And that's kind of the truth, right?
It's absolutely true. And they did also attack Nikki Haley for the money that she made after she left government. She sat on some corporate boards. They really did their best to try to cast her as an establishment figure, who turned public service into a lucrative paycheck. But, I still think that they didn't totally make a dent in her at all. And I also think that, this was a debate during the holiday season on News Nation, which is not, a platform that tons of people watch. I don't know how well watched it was by the Republican primary voters.
You've been inside the DeSantis campaign doing great reporting for months now. At one time, the presumptive front runner, he's been compared to Jeb Bush. That would mean he is just about to leave this race, if that's actually true. What's the status of the DeSantis campaign?
They've had a ton of turmoil over the last few weeks. Really DeSantis's closest allies have taken over one of his super PACs. They've started another. I mean, there has been a real shift inside the DeSantis orbit where they have really felt the momentum of Nikki Haley. I was talking to a source about this earlier today, and they have really done their best to try to, overcome it. But the thing is, they're having to attack Nikki Haley now, who has been rising in the polls, as well as Trump, the front runner. And, DeSantis's best shot is in Iowa. He has spent the most amount of time there. There's a ton of pressure for him to do well. The map looks very bleak for him after Iowa.
New Hampshire is not a place where voters really are buying his culture warrior message, and South Carolina is really a place where we expect Nikki Haley, the former governor, and Trump to do well.
Well, and Chris Christie is doing much better in New Hampshire as well compared to Ron DeSantis, which leaves me with the question, especially watching last night. It seems like Chris Christie, sure, maybe his number one priority is to be president of the United States, but it seems like his number two is to make sure Donald Trump is not. And if you're him and you're watching Nikki Haley's momentum, I keep questioning why not throw support behind her? Do we feel like Chris Christie is going to take it all the way to New Hampshire?
I'm not sure. I think it's a question of, money, if he can sort of sustain some level of support. New Hampshire isn't that far away, but it's still, January 23rd. There's still several weeks until then. He has visited the state a ton, and independents and Democrats can vote in the New Hampshire primary, which helps him. When I was in New Hampshire over the summer, I went to a few of his events, and there were, interestingly, Democrats there who were more moderate, didn't love Biden, kind of checking him out. So he could really benefit from those roles.
Sounds like New Hampshire. And Chris Sununu, the governor, wants to be a kingmaker here. Wouldn't he love to orchestrate a deal like that, walk out with both of them, have Christie endorse Nikki Haley? You could see that happening, right?
Yeah, and I think that we're really, I don't think endorsements matter a ton. I don't think that the Iowa governor endorsing DeSantis has given him a huge bump. But, Chris Sununu, the New Hampshire governor, is going to tease his endorsement, for as long as possible with the hopes that that gives whoever he picks some help in the state.
If it came complete with Chris Christie leaving the race as well, though, right? If it looked like he orchestrated that, he calls it a win for this campaign cycle.
Yeah, because part of the problem with this campaign cycle for people who do not want Trump to be president again is that there are a lot of the same dynamics as there were in 2016, where Trump has a solid base of support in the Republican Party, and the rest of the support is fractured among a bunch of candidates. And that's exactly what happened in 2016 and how he ended up being the nominee.
Yeah. You're doing an amazing job for us with this campaign. We're always looking forward to your byline, and it's great to have you stop by. Nancy Cook, up late watching, so you don't have to. Next debate, by the way, what was it?
January
right before
10th.
Iowa, the 10th of January? Yeah. We'll be talking more about it as we get closer to voting. Let's get you up to date on world and national news now. We go to the Bloomberg 99.1 newsroom and Nancy Lyons. Hi, Nancy.
Hey, Joe. The taking steps to increase security in the Red Sea to counter recent Houthi drone attacks.
The Departments of State and Defense are leading a coordinated effort to strengthen and expand the 39-member Combined Maritime Forces. That's a multinational maritime partnership which exists to counter illicit non-state actors in international waters. Everything from just basic maritime security to anti-piracy and trafficking.
National Security Council spokesman John Kirby says they're encouraging other countries to become part of the alliance. Kirby says the U.S. believes the Iranian government is enabling the Houthis to attack ships at sea, including at least one U.S. warship that downed a Houthi drone over the weekend. A major sports acquisition appears to be in the works. David Rubenstein, Carlyle Group co-founder and co-host of Bloomberg's David Rubenstein Show Peer-to-Peer Conversations, is said to be in conversations to acquire the Baltimore Orioles Major League Baseball franchise. Those with knowledge of the matter say Rubenstein, who is a native of Baltimore, is among the suitors pursuing a transaction. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, NASDAQ solidly in the green, holding on to gains. A rally in mega caps has spurred a rebound in stocks on speculation that the AI boom will keep fueling market gains. S&P right now up 37, a gain there of 0.8%. The Dow up 96, up 0.3%. The NASDAQ 100 index up 232 points, up 1.5%. The NASDAQ Composite Index up 189, up 1.3%. 10-year yield at 4.11%. We have got the 2-year 4.57%. Gold up $5 the ounce to 2,030, up by about 0.3%. Bitcoin down now by 1.5%, 43,162 on Bitcoin. Crude little changed, up 6 cents now, 69.44 a barrel. Now, what about the overall market backdrop? Heading into the jobs report, Matt Hornback is global head of macro strategy at Morgan Stanley.
Just over the past 5 days, we've seen equities go nowhere, rates go lower, and the dollar go higher. That's not a combination that sits very well with me. It makes me feel like the markets are sniffing out something more nefarious coming our way.
And you can hear more of the conversation with Matt Hornback on the Surveillance podcast. You can download it wherever you get your podcasts. Alphabet shares, they are rallying today. We've got Alphabet shares up by Google shares up by 5.3%. Shares are jumping as the release of the company's Gemini AI model eased concerns about its position within the highly competitive market for artificial intelligence. Recapping, S&P up 37, up 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
We're going to have to get Charlie Pellet a seatbelt up there because the patented double point is intensifying. If you're with us on YouTube, you know what I'm talking about. Search Bloomberg Global News. There he goes right there, the voice of the New York City subway. They are not strangers to drama in Manhattan. I'm Joe Matthew in Washington for another 15 minutes or so alongside Kaylee Lines. This is Bloomberg Sound On as we deal with the politics of the day. And it's kind of like another where do you want to start here, Kaylee, but just in the last couple of hours, we got a Dear Colleague letter from the Speaker of the House who says no more CRs.
Yep.
We talked to French Hill, the congressman from Arkansas, a little while ago. He seems to think that makes a shutdown less likely, not more likely.
Yes, because coupled with the phrasing of no more CRs, or I think he said extensions or something like that, he went on to say the Fiscal Responsibility Act, the debt ceiling deal from like 6 months ago, is the law of the land.
Yeah.
So essentially, those top line figures that were negotiated way back then, I guess, hold for these negotiations. And the congressman was suggesting perhaps that does indeed make a shutdown deal less likely because you don't have to fight over those top line figures.
That was the same debt ceiling deal that went crinkle, crinkle, and they fired Kevin McCarthy over.
Correct.
Again, this morning, having announced his plans to leave Congress altogether at the end of the year, he's saying, what? This is going to happen, I guess. Zach Cohen has the answers for us. He's over from
always does.
Bloomberg Government. He came down from up on the Hill. Literally, it's good to see you. Zach, welcome back to the table.
Sure thing.
Do you agree with French Hill here? That essentially means we have top-line numbers, and maybe they could put a couple minibus spending bills together, get this thing done.
Right, because they've got these two deadlines coming up, right? One in mid-January, one in mid-February. They sort of bifurcated the whole spending process for the rest of fiscal year 24, which ends at the end of September. So if they can come up with those top-line bills, right, like how much is going to be spent on the Department of Agriculture versus the Department of Defense, for instance, then you can come to some broader deal. But it's pretty, one of the refrains on Capitol Hill has been, are they just going to do a year-long extension until they get to the next fiscal year just to avoid a government shutdown if they can't reach some sort of other agreement? But what the Fiscal Responsibility Act was this language that basically was an across-the-board cut of 1% if it was continued to be a stopgap measure as opposed to new funding. And that's going to be bad for defense, so there's something for Republicans to try to avoid that. It would be bad for domestic programs, something Democrats would like to avoid. And so certainly it raises the pressure to try to get to a deal on top lines as soon as this week, and then they can pass some of the bills when they come back from Christmas. But there's a lot to do in just a couple of weeks, especially if they're gone for 3 of them.
Well, exactly. And Christmas is rapidly approaching. They get a longer Christmas break than a lot of us do. They're going home after late next week. So it becomes a question of what realistically they can accomplish in that time frame. Because the reality is they have until January 19th to sort out half the appropriations and then the other chunk until February 2nd. That's a lot of time in Washington, kind of. What seems like it may have less time but still may not happen is the issue of Ukraine emergency funding. We, of course, got the White House warning. The test vote failed in the Senate yesterday, trying to get that through. It seems this border security issue very much is not going to go away. Congressman French Hill also told us he thinks there is a chance this gets resolved by next week. Do you really think that's possible?
That seems unlikely. I think one of our colleagues was talking to Mike McCall, the chairman of the House Foreign Affairs Committee, who thinks this is probably a dead letter until next year. I think there's generally some skepticism that given the fact that there's a National Defense Authorization Act, the annual defense policy bill that also needs to pass before they leave, that'll take up some time. There's a couple of maybe generals or admirals they still need to confirm. And so there's a number of issues they need to sort of clear off their plate. And if they don't have an agreement on the border, then the rest of the funding for Ukraine and Israel isn't going anywhere. And so I imagine, I was talking to Senators Tom Tillis, Michael Bennet, some of these negotiators, and they said we can't stop talking until we get to an agreement because help for Ukraine is so critical. And so their trading paper is our understanding, but it's not like border and immigration issues has been an easy issue to deal with in Congress.
Them for decades.
Exactly. And so whether they get there this week, I think is unlikely. But maybe when they come back, hope springs eternal.
When you get a dear colleague letter or an email, you know that's probably going to be bad news, right? That haven't you learned over time that when it says dear colleague, it's probably not followed by anything good?
Or at least it's newsy.
Well, that's different as well.
Exactly.
Because it seems like we have kind of a combination. You know, this is not a Dear Joe letter, and it's been suggested that it was actually written for the conference that's really worried about having another Kevin McCarthy, that he's going to cut a deal with Democrats, move an omnibus, do another CR, God forbid. If that happened, would he get fired too?
It could be. I think one of the big questions right now is, do members of the House Freedom Caucus, some of these other hardline conservatives who are in the House, how much of a honeymoon period do they give him? I think everybody recognizes that Johnson has all the same problems that McCarthy does in terms of a very narrow majority. That's getting narrower, by the way, next year when McCarthy himself leaves Congress.
Right.
And then they're going to have other retirements.
So.
Exactly. And so I think the question just becomes how much personal goodwill is Johnson able to maintain among some of these members. You know, the Matt Gaetzes of the world who offered the first motion to vacate. No one's really talking about that yet for Johnson, but certainly if they end up punting on a CR again, which would basically keep funding levels that were developed by a Democratic Congress and the Biden administration, that's going to make it harder for Johnson, I think, to hold on to his job eventually.
So obviously Johnson has a lot to do. The House has a lot to do. And instead of really moving forward on those matters today, what did they do instead? They censured another member, Jamal Bowman of New York. If anyone needs a reminder, there was a fire alarm incident on the Hill a few months back.
Fire alarm incident. He pulled the fire alarm.
Right.
This video, right?
Yes.
Yeah.
And now he's been censured. And he becomes one of how many that this has happened to in this House of Representatives? Does it even mean anything anymore?
I'll be honest, I've lost count. They censured Adam Schiff, I believe, for his role in the impeachment of Donald Trump.
Which he raised a lot of money, huh?
Exactly. And I think these censures over time have started to lose their steam a little bit. It's a little like impeachment in that, you know, when impeachments are more common, when censures are more common, they sort of take the political bite out of them. Now, you can still expel a member, as we saw, you know, in somebody like, you know, George Santos. But censures are really more symbolic things. They're a sign that you have lost the support of your colleagues. And for Bowman, who did pull this fire alarm the day they were trying to pass the first stopgap measure to avoid the shutdown in late September.
The idea was he was trying to slow or stop that vote.
That's the theory, exactly. And so I don't know of any other of these censures that are in the offing, but, you know, it's another way for one side to win political points. And I'm sure Bowman's put out some fundraising emails to make some money off of it while he's at it. So it seems to be one of the things that does pass through the Republican House at this juncture while they're busy negotiating the bigger packages that aren't quite ready yet.
Hakeem Jeffries saying earlier that the MAGA GOP is wasting time on Jamal Bowman when we need to fund the government and support our allies. Take it for what you will. Zach Cohen, great to see you. Reporting from Bloomberg Government, I'm Joe with Kaylee. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. BlackRock CEO Larry Fink says Republican presidential candidates are spreading misinformation about the world's largest asset manager, declaring their preoccupation with the firm, quote, a sad commentary on the state of American politics. Fink pushed back on several claims made during the Republican debate, suggesting in a LinkedIn post today that candidates are ignoring the main issues facing the U.S., such as ballooning national debt. BlackRock shares are up by 0.4%. JetBlue Airways shares are surging today, up 14.2% after boosting its full-year financial outlook. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, JetBlue is citing better-than-expected bookings and operational performance this fall. The airline saying in a securities filing it expects an adjusted loss of 40 to 50 cents a share for 2023 and revenue growth of 4 to 5%. That compares with an earlier forecast for a bigger adjusted loss, potentially 45 to 65 cents a share is what they'd been saying. And also, they'd been saying revenue gains of only 3% to 5%. JetBlue now says demand for travel remains healthy. Yesterday, Delta said Christmas travel is shaping up as very, very strong, and it's seeing a nice uptick in corporate travel. Charlie.
And Denise Pellegrini reporting again. JetBlue right now up 14%. She mentioned Delta Delta shares, they're rallying today by 3.7%. Those are some of our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, where we check world and national news. We do that right now with Nancy Lyons in the Bloomberg 99.1 newsroom. Hi, Nancy.
Hey, Joe. A lawyer for Donald Trump in his civil fraud trial says New York's Attorney General is terrified of an expert witness. We get more from Bloomberg's Steve Rappaport on today's testimony.
The defense called Eli Bartoff to refute the state's narrative that the former president duped Deutsche Bank by inflating his wealth to secure better terms for loans. The accounting professor testified the bank would have done its own analysis of Trump's net worth before lending him hundreds of millions of dollars rather than take his financial statements at face value. Attorney General Letitia James argues even if Deutsche Bank executives don't think the firm was a victim, what Trump allegedly did still amounts to fraud. In New York, Steve Rappaport, Bloomberg Radio.
Former President Trump was in court today and is set to take the stand for a second time in that civil fraud trial on Monday. A Texas judge is allowing a pregnant woman carrying a fetus with a fatal diagnosis to have an abortion. Molly Duane, a senior attorney for the Center for Reproductive Rights, represented Katie Cox in the challenge to the state's strict abortion ban.
I want to emphasize how unforgivable it is that Katie health care in court. No one should have to do this, and the reality is that 99% of people cannot.
Again, that's attorney Molly Duane. Doctors told Cox, who is 20 weeks pregnant, her baby would likely be stillborn or live for a week at most. Inducing labor would carry a risk of a uterine rupture because of her prior cesarean sections. The state could appeal today's decision. David Rubenstein, the chairman of the Carlyle Group and host of Bloomberg's David Rubenstein Show, peer-to-peer conversation, well, he's in advanced talks to purchase the Baltimore Orioles. Those familiar with the situation say the talks are preliminary and could fall apart. Rubenstein is a Baltimore native and would likely keep the team in the city after years of relocation rumors. The team is currently owned by the Angelos family. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, thank you. Still recovering from the debate last night. I suppose the candidates are as well. Everyone was going to go for broke on this thing, knowing it was the last debate. But then, well, it's not the last debate anymore. We've got two more on the board.
Yep.
Kaylee.
From CNN, or hosted by CNN, rather.
It's pretty, I mean,
one right before
good move for them.
Iowa.
Yeah.
January 10th.
January 10th, Drake.
Yes. So in Des Moines. And then shortly thereafter, before New Hampshire, on January 21st, another.
St. Anselm, Goffstown. That's essentially the eve of the primary.
Yeah.
January 10th, that's about 5 days before the caucuses.
Correct.
And so I wonder who's going to be, what'll be the criteria, because these were so far have been RNC-sponsored debates with rules, which is why they winnowed the field with each of them. Could we be in a world where we get 6 people back on stage or something? Or
are there even 6 people left to be back on stage?
Let's remember, Asa Hutchinson has not dropped out of the race.
Okay. So 5. Because Burgum's gone, Tim Scott's gone, Mike Pence.
Who am I forgetting, James? There's someone.
Will Hurd's gone.
Will Hurd's gone. Suarez hasn't dropped out.
No, he was the first. He's out. He's out. He's long gone.
I thought he was one of those I just stopped campaigning. We actually got it. I'm dropping out of the race from him? Okay.
Yeah, when he didn't qualify for the first
so maybe it's
debate.
5. We'll see how that goes. But the question is, could it be 6 with a guy named Donald Trump?
That is the question.
Rick Davis predicting maybe not so much Iowa, but that after potentially weaker than expected showing at the caucuses, he comes flying into Manchester, may even shows up unannounced just to make a splash, which would be quite a moment for us.
Well, you could maybe see how the Trump campaign would look at Nikki Haley's strength in New Hampshire. And maybe it gets a little bit more scary if she does well in Iowa and you feel like you actually might need to be making your case to those voters. A feeling he clearly hasn't really had the first 4 debates because he's far and away the front runner, and that has firmly not changed.
It's pretty incredible. We thought, Iowa and New Hampshire might be snoozers. They're getting real interesting real fast, and we're going to be there to bring you everything that happens in the early states, as you better believe, here on the fastest show in politics. We'll talk to Frank Luntz about the debate a little bit later on Balance of Power on Bloomberg TV. Kaylee, I'll meet you then. Starts 5 o'clock Washington time, and we'll do this again tomorrow. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Good Thursday afternoon from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. It is Jess Ment and Paul Sweeney. We are live here on the Bloomberg Interactive Broker Studio. We're sitting in for Tim Stenivek and Carol Masser. They are out today, so it's up to you and I, Jess.
Oh, this is going to be so much fun. What a busy day for you, but also you had a birthday week this week. Big birthday.
Yeah, big 6-0 yesterday. So survived
Congratulations.
that. Thank you very much. Survived that. All good here on this end. Nice day for the market here. You know, we've got the stocks kind of at or near their intraday highs. S&P 500 up 0.75%, and the NASDAQ up 1%. Some good news out of, I guess, Google was AI.
Yes.
They're getting into the AI game in a big way.
Especially when you do think of Alphabet in the communication services sector, of course. You look at that industry group in the S&P 500 today, up more than 3%. So clearly being driven by Alphabet shares rallying here. And then, of course, behind that technology sector, up more than 1%, Paul.
Yeah, a lot of stuff happening on this show today. A lot of good stuff to bring your way. We're going to talk about the semiconductor market. You know, it's all been about AI this year, but not all semiconductor companies are created equal. Not everybody's in the AI business. So we've got Bloomberg News. U.S. semiconductor networking reporter Ian Keen's going to join us about what's going on in the chip space as well.
It's going to be great. Also, of course, we're going to be talking some U.S. equity strategy outlooks for 2024. So we're going to have Alex Simonova, but also Elena Popina from our U.S. equities team, our two-star reporters there to talk about positioning heading into year-end and what those strategist outlooks look like in 2024, Paul.
Yeah, we're also going to have a big story today is our good friends at SpaceX. They're going to be tendering for some shares. That's Elon Musk's company, their space company, will be tendering for some shares that could value the company at $175 billion. That's up from $150 billion just over the summer. So just extraordinary numbers being thrown around there for SpaceX.
And of course, I'm really excited to have Max Abelson on, who is the Bloomberg Business Week contributor. So he's going to talk about the ownership episode of his new show, The Business Week Show. So he's always a blast to have on. He's so much fun.
Great writer. I kind of read anything that he writes.
Fantastic.
So we got a lot coming up over the next 3 hours. Again, Jess Ment and Paul Sweeney were sitting in for Tim Stenivek and Carol Masser. So we'll bring that all for
Who's
you.
who? Are you Carol?
I don't know. Anything you need me to be. So we'll have all that coming up in just a few minutes. S&P 500 up 0.75%. So good stuff coming up. All right, right now let's go to Bloomberg's countdown to the close. That starts right now.
Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Jess Menton and Paul Sweeney, filling in today for Carol Masser and Tim Stenivek. A hearty welcome to all of our audiences across our Bloomberg platforms, television, radio, originals, and our partnership with YouTube here on a day where the equity market's doing well, the commodity market's not doing a whole lot, Treasury's just kind of meh, but upstairs from us right now, guys, there's a huge holiday party going on right now.
It is.
How many drinks have you had today, Paul?
No, but there's everything up there. Now, most of it I don't know what it is, but it's some really cool.
I tried to get some of the chicken nuggets, and it was impossible. But I did get a couple other goodies up there. But
yeah, they've been taking care of us this week.
Oh, they have been. It's been delicious.
Holiday food and stuff.
But something Paul and I were chatting about is this story on the terminal, looking at the hottest jobs in U.S., also looking at this $80,000 a year that I know that y'all are looking at, Romaine. But there's another one that I wanted to take a close eye on as far as something that really struck me too, because boozy holiday office parties replaced by guac and pickleball. So we were just talking about sort of these goodies that we've had upstairs. I don't know about you, Paul, if you play pickleball. I like guac though, but it seems like these boozy holiday office parties are
Maybe they were thinking of my generation. I can remember a few of them back in the day. But it's nice just having the holiday celebration. Everybody's back in the office today. Maybe it's the food and all the party stuff. But
yeah, there was no
You know how bullish you are, Paul, about in office.
Yeah,
so
they're back today. They're back today. But again, a good day in the market. And I'm just looking at this Alphabet news. You know, with this Gemini AI product, the street really likes this thing. It's pushing that stock up high. And again, it's the AI.
What's the holiday party over that for the AI folks? I would assume their holiday parties would be pretty good. right? I mean, I don't know. I mean, OpenAI, that's got to be lit, right?
Plenty of guac and pickleball for those guys. Let's talk about that story that Jess mentioned, because we do have Jobs Day tomorrow. It's been a jobs-filled week overall with all the data coming through. The hottest job in the U.S. right now pays $80,000 a year. It doesn't require a college degree, and you get to spend your time outside. It's not pickleball. No. It's being a technician of wind turbine. So being a wind turbine service technician, and employment of this position will increase almost 45% over the next decade. This is according to the BLS. They predict this, and it's going to be faster than in any other occupation. And we know the federal government is subsidizing this renewable energy push.
That's because we're putting more of these wind
yes, and they will need repairing. Yes.
Okay. This is not for me because I do not like heights at all.
Yes, you have to be able to deal with heights.
You have to climb up to the top of this thing?
Yeah, and you go inside of it and you come out of it.
That's terrifying.
They don't have like a software program that I can just hit from the ground?
300 feet in the air and it's windy because it's a wind farm.
Thank you, Paul. I hope it's windy, otherwise they have it in the wrong place.
Exactly.
But I mean, I always like these stories too, because I mean, in all seriousness, it does show, there are obviously significant structural changes to our economy and the way we live and the things we do. And often with that brings up job opportunities, as you need people to fill those roles, to keep these things, to build these things and keep them working.
I'd imagine that you have to be a certain height and a certain weight so that you don't get blown over as well if you're in. Seriously, right?
I'm only 5 foot, so
I know. I was thinking this too.
Me.
As someone who's 5'3" on a really good day, that won't be able to transition into that job. Yeah.
Okay.
All right, looking at I don't know, I'm just kind of looking at this market, seeing how we're starting off December in a pretty good way. Because, I mean, that month of November we had, 8.9% move in the S&P 500. That's hard to follow up, but from a seasonality perspective, maybe we'll get some more good news coming in December.
Well, I mean, if you look at the forecast, and I'm not talking about like the price targets, but I mean the forecast for profitability, the forecast for margin, the forecast even for revenue growth here, it seems to suggest that at least from a corporate fundamental side, there'll be a support there. Now, whether the economy is going to cooperate completely, and more importantly, central banks, that's another discussion.
Yeah, I mean, if you look at small caps, though, to Paul's point, this month, taken off and especially outperforming some of its larger counterparts in the latest weeks. But we have to go. We've got some exciting things on radio coming up the next few hours, but we'll be back for Beyond the Bell, close to the closing bell. So stay tuned for that coming up, guys. We'll see you then.
Nice work if you can get it, and if you get it, won't you tell me how?
Broker Studio. Oh, there we go.
The blue button.
TV to radio. Just, you got to do it on radio. So anyway, Jess Met, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com. That would be the internet. And that you'll find us here at Bloomberg Radio. You can do a little search there. So again, Jess, a nice finishing out the day with some pretty good moves to the upside here in the equity markets.
And then looking ahead to tomorrow, jobs report.
Yes,
so
exactly.
It is obviously, we've talked a lot about the blackout period for Fed speakers this week, but we do have the jobs report coming tomorrow. So that will be very much on investors' radars. Also, average hourly earnings will be a part of that report, which we know Fed Chair Jerome Powell and other policymakers are going to watch very closely ahead of their decision next Wednesday. And also ahead of that decision on Wednesday too, we have CPI next Tuesday, Paul. So still a number of indicators ahead of the Fed's decision. So things we need to keep our eyes on.
Yeah, and just taking a look at the non-farm payrolls, 185,000 is a consensus tomorrow, and that's up from 150,000 the prior period. So we'll keep that in mind. And average hourly earnings on a year-over-year basis, 4% increase, be a little bit of a decline from 4.1% last period, but still some pretty solid numbers. A little bit slower than what we had seen, but I mean, the unemployment rate, 3.9% is kind of the forecast there, and that sounds pretty good. But Michael McKee, he looks at it a little bit more, peels a little bit more of the layers of that onion.
He's the best to do it.
Exactly, right. So Michael, what are you going to be looking at tomorrow? And, when we get all this data on just kind of the labor market in general?
Well, I think the market is going to focus, assuming we get
a somewhere near consensus number for job creation. We'll focus on unemployment and whether that goes up and why it did. If it does, are more people coming into the labor force, which is not necessarily a bad thing, or are we starting to let people go? That'll be the primary question. And then people will be looking at average hourly earnings because they want to see if earnings growth is slowing down enough that the Fed doesn't have to be worried about it continuing to contribute to inflation. We're forecast to hit 4% on a year-over-year basis, and the Fed thinks sustainable is about 3 to 3.5. So we're getting close. Yep. So those are kind of the numbers that most people will be focusing on tomorrow.
Will that report adjust anything for the Fed's decision next week, or do you feel like that's pretty much already a done deal and it's more of just the forecast, the quarterly forecast, and obviously the dot plots that are going to come with that decision?
Yeah, it's pretty much a done deal. The Fed, it would take something going horribly wrong tomorrow, and I'd be back on this show trying to explain it at this time tomorrow. The Fed has all but signaled they're done raising rates. It would require a lot for them to do something at this meeting, and probably not as much in tomorrow's report as it would be the CPI next week.
Right, on Tuesday.
So I don't think you're going to have to worry about the Fed out of tomorrow's report. It'll spur conversations about next year and when the Fed might or might not cut rates, but not anything for next week.
So the Fed, I'm not sure what the right word is, but I guess they're prepared for the unemployment rate to inch a little bit higher. Is there a point where it gets beyond where they're comfortable? Like, is it like have a 5 handle and then they said, oh boy, and then they really need to be maybe a little bit more aggressive here?
Well, they were forecasting 4.1% by the end of the year, so we're sort of in the range and may come in lower than that. But if it got above, if we had a jump like we did a couple of months ago of about 0.3 and we went up to 4.1% from 3.9, or we went up to 4.2, that would get their attention. If we got over 4.5, that would start to raise concerns there. The speed of it and the composition of it would also matter to the Fed, and what else is happening with inflation. They are expecting unemployment to rise because their job is to squish down on demand. Yep. And CFA that, in theory, should lead to fewer employees needed, and so unemployment rises. But the speed would concern them if it was quick, and if it started to get too high, of course, by that time they would probably already be acting.
I'm glad you're here because something I've been thinking about is the rotation for Fed voting members each year. So Austin Goolsbee, Patrick Harker, Lawyer Logan, and then Neil Kashkari currently voting members this year but won't be next year. So then we're going to have Loretta Mester, Thomas Barkin, Raphael Bostic, and then Mary Daly will come back as voting members for next year. How do you think this, when you have those rotations, because in recent years, especially as inflation was very elevated, it seemed like everybody had to have these unanimous votes as far as trying to tame inflation. But when you're going into a year and stock investors are betting that they're going to be rate cuts, when you have a rotation changing like this, how do you view that? Are things really going to be that different? Could that potentially change the expectations for how sooner or later rate cuts could potentially come?
I think people make too much of that. The people who are coming on are generally centrists, with the exception of Loretta Mester, and she's leaving in June. So I don't know that we'll see a lot of pushback. You're right, we get more unanimity when it's very obvious what the Fed should be doing, which for the last year or so has been very obvious that they should be raising rates. And when you get into a situation where it's a close call, should we hold or should we cut rates, then you could see a dissent or two from whatever it is the Fed decides to do. But I think we're not going to see any major splits among them. They're going to move slowly, even unless we have a recession. They're going to move slowly, so even if they do, it's not going to force a lot of people into an uncomfortable vote.
So the University of Michigan, some good football players there, but they also
so they'll tell you.
Yes, and they also have some good economic data, and they put that out, and expectations and inflation outlook and things like that. Do economists, do they care? Does the market really care about some of this data?
The market doesn't really care about the, and the Fed doesn't really care about the sentiment indicator.
Okay.
How people are feeling. Alan Greenspan summed it up very well years ago when he said, "We watch what they do, not what they say." Talking about consumers. The expectations for inflation have become moderately more important because the Fed has made a big deal out of inflation expectations being the anchor for inflation, and they don't want to see expectations rise too much, both on the consumer or market side. Market side right now is looking at 2 to 2.5% inflation out 4 or 5 years, which is perfect for the Fed. But Americans are looking at 4.5%. Now, the sentiment indexes, people always overrate what inflation is, and if you go ask any American, they'll probably tell you now it's 6 or 7%, just because they don't know what inflation is. But even if you allow for that, it's a little bit higher than both the Fed would like to see and that you would expect, given the fact that food prices have stabilized, gasoline prices are way down, and yet people are still thinking there's a lot of inflation. They're looking at price levels rather than the rate of change, which the Fed looks at. So there is kind of a difference there. But as long as people don't start thinking inflation is going to go so high, they have to march into the boss's office and ask for more money, which, of course, we would never do.
No,
Never.
No, never. Hey, you know, I was out gallivanting in the city, Midtown, yesterday evening.
For your birthday?
Yes. People were
I did
out.
not know.
Big birthday.
People were out and about, spending. Streets were packed. You couldn't get near the Christmas tree at Rockefeller Center. I mean, people were out. It feels like the consumer is in pretty good shape. I don't know.
Well, people tell pollsters that the economy is lousy, but my situation is good. People have jobs. I mean, we have 97% employment. And so it isn't a terrible time, and there's more and more talk of this. Is like poor Joe Biden. I mean, he's presiding over a good economy, and people don't believe it for a variety of reasons. But things aren't bad right now. So Americans on their own individually are quite happy to go out and buy Paul a hot chocolate on his birthday.
Exactly. See, that's how we roll out there. All right, Mr. McKee, thank you very much. We appreciate it. Michael McKee, international economics and policy correspondent. And Jess, I mean, again, the restaurants are packed, the bars are packed. The Fifth Avenue, you could barely walk down. I mean, that's how crazy it was.
You know, we'll get actually an update on retail sales next Thursday, so the day after the Fed decision for the month of November. So this will give us a read, especially on the holiday spending. We already got a lot of that Cyber Monday and Black Friday data that were at records, so we know it was really strong last month, but that's going to be interesting to see what that data looks like for the consumer, Paul.
Yeah, and a shout out to the tree. The folks who did the tree at Rockefeller Center. It looks
amazing.
Awesome this year. I mean, we just walked by it. It looks awesome.
I mean, we've got a tree here, too, at Bloomberg, but not quite as big as that one.
So if you're around, the Bloomberg HQ, come check out our tree in our courtyard. Pretty darn cool. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
3:21 on Wall Street. We do check markets all day long here at Bloomberg. We got ourselves a mega cap rally underway. 39 minutes to go until that closing bell clangs on Wall Street. And this update brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. The Dow, the S&P, NASDAQ, the NASDAQ 100 index, all advancing right now with the S&P up 36. Again, very close to session highs, up by about 0.8%. The Dow up 70. Higher by 0.2%. The NASDAQ Composite Index up 190, up 1.4%. NASDAQ 100 Index up 1.5%. Small cap shares are advancing as well, with the Russell 2000 up by 0.6%. 10-year yield 4.13%, with that 2-year right now 4.58%. Wall Street is looking ahead to tomorrow morning's jobs report and how it will play into market hopes for Fed rate cuts next year. Tiffany Wilding is North American economist at PIMCO.
The Federal Reserve has told us that they are still worried about the last mile problem on inflation. In order to really ensure that inflation's back to target, we think you do need to see some more labor market loosening.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Crude oil is declining. Actually, crude oil is higher now by 0.3%, $69.54 a barrel. But it is oil stocks that are declining. Among some of those names, ExxonMobil down by 1%, BP down by 0.6%, Chevron lower now by 0.3%. Again, recapping, stocks are higher. S&P up 36, up 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Jess Minton and Paul Sweeney here in the Bloomberg Interactive Broker Studio, filling in, of course, for Carol Massar and Tim Stenovic, who do have the day off. I'm excited about our next guest because we've talked so much, Paul, about the chip makers, the AI euphoria. So our next guest, Ian King, U.S. semiconductor and networking reporter for Bloomberg News, who's joining us on Zoom from our San Francisco bureau, is going to chat with us about his latest story, the chip market troubles pose threats after AI euphoria. Ian, thanks so much for taking the time to join us. Walk us through what some of these latest issues are here.
What we're trying to say here is the SOX index, the Philadelphia Stock Exchange Semiconductor Index that everybody looks at when you're looking at this sector. It's up 49% this year, which is, that's fantastic, right? It's a great return. Anybody would love that. But if you kind of peel the onion back a bit here, you see that the majority of that gain, of that advance, has come from just 3 or 4 stocks. And those stocks, like, the NVIDIAs, the AMDs, the Broadcoms, are very tightly sort of connected in investors' minds with this surge in AI. And if you then sort of look for other opportunities in the sector and you look at some of these other names, you see that, the demand picture there is very mixed. And that's something that makes investing in the sector a lot harder than it used to be, which kind of used to be a cavalry charge in and a cavalry charge out. And that was really what we were trying to sort of highlight in the story.
And that's kind of how I learned about the semiconductor industry. It's a big, long cycle industry, and you got to get the cycle right. And if you get the cycle right, you could make money in these names. But now, and again, your story goes right to it. You kind of have to make, a name by name. Is it AI rated? Does it have AI exposure? It's getting a little bit more tougher maybe to invest in semiconductors.
Yeah, the majority of revenue for this industry used to come from 2 areas, from PCs and smartphones, and they're obviously indexed to consumer and corporate spending. So they were a play on the economy. They were a play on, where are we in the boom and bust glut under supply cycle, and relatively easy to sort of spot what was going on. But now the industry gets a lot of sales from automotive, from all of these other new areas that it's branching out into. Everything's getting smarts, everything's getting intelligence, everything is being connected. And the problem that investors are facing right now, as we tried to show in the story, is that these markets were supposed to diversify the risk and make everything nicer. But the problem is the boom and bust cycle for these individual markets is different, and their timings are on and off. So that's making certain stocks and certain companies struggle, while others are really, can't get enough product out the door to meet demand. So a much more mixed and a much more complicated environment than it used to be.
Well, looking at Broadcom in particular, AVGO is the ticker symbol on this, up close to 2% today. It's also gained around 65% year to date. We're also going to get their earnings after the closing bell. Walk us through what we should expect to hear from them.
Yeah, no, that you've gone to the heart of the matter. They're the perfect example, right? On the one hand, they are making the switch chips, the router chips that are in the data centers that are being full of NVIDIA-based equipment to fuel this AI boom. So that's great, right? What could be better? Why don't we just jump into them? But at the same time, they also make connectivity chips that go in the iPhone, right? They also make controllers that go into storage, computer storage. They also make chips that are part of autos. And all of those markets are doing different things. That a lot of their chips go into systems that are basically part of corporate networks. And as we know, corporations aren't spending that heavily. And then you throw in the fact that they've also bought a lot of software companies recently and made enterprise software a big part of what they're doing. So, they're the perfect example of this new sort of level of complexity and understanding that you have to sort of bring to the table to try to understand what's going on and try to make a decision on whether this now is the right time to get behind these companies.
Hey, Ian, where are we in kind of that cycle for PCs and smartphones? I think of a company like Micron Technologies, who's the big maker of memory, semiconductors, and all that kind of stuff. Where are we in that cycle?
No, I mean, that's a very good question. And again, I think it exemplifies how difficult things are at the moment. For the last year or so, it's been a horror show because makers of devices, whether it was smartphones, whether it was PCs, had way too much inventory on deck, right? They'd done this massive stock up, fearing the shortages of the pandemic. And then all of a sudden, demand dries up. It turns out that we don't need 15 PCs in every house. So they basically have cut orders, and companies like Micron were in this hideous situation. What we're being told, and what the majority of opinion is that the inventory has kind of washed out. We've worked our way through it. Whether consumers, whether corporations are rushing back to buying these devices, to particularly smartphones, particularly PCs, or not, is a bit to be decided, frankly. But the inventory overhang, as it's referred to, that appears to be out of the way. So things aren't as terrible as they were, but it's probably a bit too early to be dancing around with happiness.
You write about in your story how the rapid run-up in demand for auto chips have overshot. Anytime I hear about sort of the automakers, especially EVs, I always think, of course, Matt Miller, right. Paul.
Well, you can think about me now because I just bought a new car, and it feels like I'm riding. It's basically like an iPhone with 4 wheels. There's buttons and switches and icons everywhere. I can't imagine how many microchips are in my car. You said you felt like a fighter
pilot at one time.
Yes, I got the heads-up display. I'm having fun driving it.
Paul Top Gun Sweeney.
Yeah.
But Ian, looking at this and some of the automakers on aggregate that are no longer adding to their inventory stockpiles, walk us through what this could potentially mean and maybe some of those repercussions.
Yeah, I mean, there is some debate about exactly where we are in that balance, but to the point that you just made, which I think bears repeating, every switch, every new dial, every new display, every new function that's feeding into all of those things that are there on your dashboard has a semiconductor behind it. The content of each device has gone through the roof, and it hasn't really been an explosion of sales of vehicles. We're still at that kind of sub 100 million units a year level, but it's just the amount of chips that go into them has fueled this tremendous surge for this part of the semiconductor industry, and they love it. Obviously, the more like a computer it becomes, the better it is. Now, if we cited a report in the story, the argument is, well, maybe that secular situation has peaked. Maybe we don't need that many more chips in our cars. Maybe we've got as many as we need, and it's going to sort of plateau and be related to how many cars get sold. Some people are saying, no, that's not true. We still need a lot more. Others are saying, no, I think that's where we are. And then obviously we have what's happening in the end markets for vehicles themselves. EVs are the key market in terms of you need a lot more chips to control the batteries, to control the motors. And if sales there are plateauing, if we're ending up with inventory on the lots, then that's in theory a bad sign for the chip makers as well.
Hey, Ian, just real quick, 30 seconds. if I'm a chip company and I don't have AI exposure, do I go out and buy it? Will we see some M&A in this space?
It's very difficult. We saw M&A happen sort of 4 or 5 years ago. There was a lot of consolidation of small sort of sub-sized companies. There aren't an awful lot less. And also the regulatory environment, as we've seen, for getting approval for these deals is very difficult. Washington is looking closely at this. Beijing is looking very closely at this sector. So not easy to get any of these deals done.
Yeah, it's interesting. I mean, if I were CEO and I didn't have exposure, I would tell my team either go out and make it up or go buy it, because we have to, the valuation differential is so great. Ian King, thank you so much for joining us. Ian King, U.S. semiconductor and networking reporter for Bloomberg News, joining us on Zoom from our San Francisco bureau, which is exactly where you want a semiconductor reporter to be, in San Francisco.
Yes, that's the place to be.
Yeah, not in New York. You're going to be out there in the valley.
It's interesting because looking at the Philadelphia Semiconductor Index, SOX is the ticker on that, up about 48% year to date. Last year lost a little over 35%, so that was its worst annual loss since 2008, so the global financial crisis. So you've seen those chip stocks snap back this year, but obviously a lot of them depends on what types of chips and what components that are going into some of these products. So it's been really interesting to see the run they've had so far in 2023.
Yeah, absolutely. I mean, it's historically it was PCs and phones. Now it's AI. Boy,
yes.
That's where the growth is. We'll have more coming up. Right now, let's head down to Washington, D.C. Why? Because we're going to check out Nancy Lyon. She's got latest on world and national news.
Thanks, Paul. Israel's military says its mission to destroy Hamas's tunnel network in Gaza will take months and leave the territory virtually unlivable. Bloomberg senior reporter Anthony Squizine has been speaking with Israeli military leaders. He says this is likely to add to growing international criticism of Israel's war in Gaza.
I think they do realize it's a problem, but they haven't really spelled out a way out of this, and that's adding to the criticism. There's no sign of any real thought to what comes on the day after.
Bloomberg's Anthony Squizine reporting from Tel Aviv. Israel's military says it's found 800 tunnels across Gaza and has so far destroyed 500 of them. After the administration's request for aid to Ukraine and Israel failed on the Senate floor yesterday, negotiators say they're not giving up. And while the U.S. faces new questions about its continued support for Ukraine, global backing for the fight against Russia is not looking much better. We get more on that from Bloomberg's Nathan Hager.
Global support for Ukraine fell to about $2.3 billion between August and October of this year. That's a nearly 90% drop from the same time a year ago, according to an analysis from the Kiel Institute for the World Economy. This puts Western support for Ukraine's fight against Russia at its lowest level since January of 2022, the month before the invasion. Kiel's research director says with U.S. support uncertain, Ukraine needs the European Union to pass its long-awaited $50 billion aid package for the war. In Washington, I'm Nathan Hager, Bloomberg Radio.
Live Golf has apparently enticed another golfer to leave the PGA Tour. The Wall Street Journal is reporting reigning Masters champion Jon Rahm is set to leave the PGA for a multi-year contract that would be among the richest to date. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ holding on to gains. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Alexandra Semenova.
Good afternoon, Charlie. Lots of green on the screen today with stocks higher across the board. Dow is up about 50, S&P 500 climbing 0.7%, NASDAQ 100 with a 1.4% gain, and the U.S. 10-year yield is just a touch above 4.1%. Gold is down slightly today, oil is in the green, and Bitcoin is down by 1.2%. Among the main 11 S&P 500 sectors, leaders were communication services, information technology, consumer discretionary, and leading the way lower were industrials, healthcare, utilities, and energy, all in the red. Leaders to the upside in the Dow include Microsoft, Goldman Sachs, and Apple, and United Health, Walmart, and Merck were headed lower. In the tech space, Alphabet Inc. is up 5%, a day after Google released Gemini. That's the largest and most capable AI model it has ever built. In other company news, JetBlue Airways boosted its full-year financial outlook on better bookings. Elon Musk's SpaceX has initiated discussions about selling insider shares and wrapping things up. Some of the names reporting after the bell tonight include Lululemon and DocuSign. Live from the First Word breaking news desk, I'm Alexandra Semenova. Charlie?
All right, we thank you very much, Alexandra. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Minton, Paul Sweeney here in the Bloomberg Interactive Brokers Studio, filling in for Carol Massar and Tim Stenovic, who do have the day off. Not sure who's Carol, who's Tim here, Paul, but
Exactly.
Looking at the S&P 500 today, up 0.7%. If you look on a weekly basis, a little changed, but this does come following a 5-week winning streak that was its longest since June. But who better to chat with us about their market outlook moving forward? Christoph Gleisch, President and Chief Investment Officer at Harbor Capital Advisors, who's actually here in the Bloomberg Interactive Broker Studio. I know Paul always loves when people are here in office with us to discuss his outlook and also his investment strategy. I want to pick your brain now that we are into year-end here. What's your take as far as positioning-wise going into next week ahead of the Fed decision?
Well, thank you so much. It's great to be here in person and live. I think this year has surprised a lot of people. It's got a lot of investors offside. If you think back where we were 12 months ago, supposedly now we should be 3 or 4 rate cuts in as the Fed is continuing to try and stimulate an economy coming out of a recession. We know how that sort of playbook played out. And I think what surprised investors is how resilient growth has been this year, how resilient markets have been this year. And, at the moment, your colleague read out, there's a lot of green on the screens. Camp soft landing is winning, and it's very much risk-on environments at the moment, as it has been in the last 5 weeks.
How do you think about valuation here? Because I think that I'm just looking at my chart of the S&P 500, and boy, that was a heck of a November there. And I'm wondering if we've kind of gotten a little bit too over our skis a little bit in terms of valuation. How do you guys think about that?
So I'd say trying to time markets on a short-term basis, what's going to happen this week or that is pretty difficult to do. I think valuations here, I'd probably say fair. And so we would recommend having a good allocation to equities for investors that are ultimately investing for the long term. Of course, it's a market of many different regions, many different market capitalization. I think there are areas of the market that are looking pretty cheap right now.
You talk about in some of the notes you sent us, don't hide out in cash. We've seen the fury into money market funds over the past year being at a record here. What's your view on as far as what's the catalyst when people argue about, oh, well, we're going to put our money in money market funds for the yield, but then if you have these double-digit gains in these major indexes, how do you square that away? And at what point does that money move out of money market funds and then into equities?
So I think if you look at any long-term investment chart over any time, over any reasonable time horizon, there's always a squiggly line at the bottom in decay, and that's always cash. Cash is the worst performing asset class over any reasonable time horizon. So what we would say is hold enough liquidity for your immediate liquidity needs as an investor and what you're comfortable with. As it pertains to what's going to create some of that cash to come out, there's $7 trillion. $7 trillion is a huge number sat in money market funds. And I think in certain areas, we've seen investors wait on the sidelines for this supposed recession that hasn't come. And I think the longer that we continue with this soft landing scenario at the moment, it's going to pull more investors. And they're going to begin to start putting money to work. And we're already beginning to see that. And specifically around small cap as well. I think it's a pretty attractive entry point right now.
All right,
small
that's
caps.
where I wanted to go.
There we go.
I hear small caps, mid caps, small caps, but man, that's a tough place to make money historically. Is it a valuation call that attracts you to the small cap space? Is it just that maybe they haven't performed? Kind of, how do you think about that?
So the answer that we hear most often, and we actually asked this, we held our global market outlook call, and the theme was in search of bright spots yesterday, and we asked our clients around small cap, and the answer that got the biggest response was waiting for the recession before allocating to the asset class coming out the other side. Okay, there's a lot to unpack there. Recessions are incredibly hard to kind of forecast and predict exactly, but we get it. We understand that mentality. If you look at small caps, they've effectively been in a recession for the last 2 years. Some colleagues of yours did some great analysis on the Bloomberg terminal the other day, and I saw small caps are currently going through their second longest drawdown in history. It's only coming out of the tech bubble you can compare to this. So if you look at small caps, they are off in the region of 30 to 40% off their peak. And you've begun to see a broadening of the markets. You've begun to see a bid for small caps, and I think investors are already beginning to come back in.
Yeah, that's really interesting that you brought that up because it's the worst 3-year span relative to the S&P 500 when you're looking at the Russell since the late 1990s and the turn of the century. What sectors in particular, when you're looking at small caps, are attractive to you?
So the way that we work at Harbor Capital is we work with boutique money managers across the world that we believe are experts in their own domain. So they do all the day-to-day stock selection. A couple of things I'd say about small cap is it's an area that we think is ripe for skilled active managers to add value. We think a skilled active manager in small cap can add 3 or 4% net of fees. And ultimately, you're outsourcing that day-to-day stock selection to those managers. I think some of our managers at the moment, particularly, again, this is a bit of a contrarian call, like biotech has been absolutely hammered in that space. But there is some optimism building. You can't fall too much further from the basement. And potentially what we might see is some more M&A in the healthcare sector that might put a bid on some of these biotech names. So that was one of the themes that came out of our outlook call yesterday.
How about the ETF space? It's getting a ton of cash. How do you guys get exposure there?
So we've been in the ETFs now for 2 years. We launched 2 years ago. We now have 14 ETFs. We have about $1.3 billion out of our $50 billion is in actively managed ETFs. And we think, a lot of the innovation, a lot of the money flows are going to continue to go to ETFs, especially for taxable clients.
All right. It's interesting. I mean, that's just kind of where the capital's flowing, so you got to have exposure there, right?
Yeah, absolutely. And specifically for us, where we've seen money put to work in our ETF lineup, one of our flagship strategies, the ticker is WIN, WINN. It's run by Jennison here in New York. It's a large cap growth, concentrated, fully active, transparent portfolio. And it's done phenomenally well. It's up 47 or so % this year and has outperformed its respective benchmark by about 1,000 basis points.
Well, good Good stop there. Good start. Christoph Gleich, thanks so much for joining us. Christoph is the President and Chief Investment Officer of Harbor Capital Advisors. They have about $50 billion in assets under management. And he joined us here in our Bloomberg Interactive Broker studio, so he gets a special star there. S&P 500 up 0.75%. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. Among some of the bigger names, we will be hearing from Broadcom. Its shares up now by 2%. Year to date, the stock is up 65%. Dollar General says deflation is beginning to show up in discretionary categories, and in some cases, the company does plan to pass that on to customers with lower prices. The discount retailer largely serves lower-income shoppers who in recent years have been hit with higher costs for goods ranging from clothing to groceries. Dollar General shares, they're down right now by 1.5%. Rival Dollar Tree is up by 0.3%. SpaceX is getting a high-flying valuation in a tender offer that Elon Musk's rocket company is kicking around. And with more details, here's Bloomberg's Ed Ludlow in San Francisco.
There is the potential at some point for a Starlink spin-off or IPO. And so everyone, everywhere, they just want a slice of this pie. And the valuation we're reporting based on this current tender is going to jump from $150 billion to $175 billion for a company that right now sends rockets into space. It's just It's an amazing story.
Bloomberg's Ed Ludlow, and if that $175 billion valuation holds up, it would put SpaceX on a par with T-Mobile, Nike, and China Mobile among the 75 biggest companies in the world. GameStop has disclosed an unorthodox plan for its roughly $900 million in cash and equivalents that will allow its billionaire CEO to buy stocks and other companies. And those are our top company stories at this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
Jess Minton, Paul Sweeney here in the Bloomberg Interactive Broker Studio, filling in for Carol Massar and Tim Stenivek, who do have the day off. Now, Paul, I saw a story cross the terminal. Elon Musk lashing out again at Bob Iger after Disney pulls ads from X. You covered Disney as an analyst back in the day.
Fairly well. Oh, thank you.
That blue button.
Thank you very much. Yeah, I've covered Disney stock for decades. Know Bob Iger pretty well. He's a super stand-up guy. Anyway, Elon has some concerns here. Elon lashed out publicly for a second time at Walt Disney Company's Chief Executive Officer Bob Iger, escalating criticism over the entertainment company's decision to join an advertising boycott of his social media platform. Quote, Walt Disney is turning over in his grave over what Bob has done to his company. Musk said on X, the social media service that he owns. Musk also said Iger, quote, should be fired immediately. And the comments come after Disney, along with other companies, paused their ad spending on X, formerly Twitter, following Musk's endorsement of anti-Semitic remarks on the site. Disney was one of the largest advertisers on X. So it is a fundamental a fundamental revenue problem for X. When some of these advertisers pull away, because that's their revenue source, advertising.
In your career, because you've done this for a while, your experience,
Yep,
Paul.
that's right.
So when have you seen another time where you've seen something like this happen between different CEOs?
It's rare. It's rare. Usually it doesn't get personal like this. It's one thing to say, hey, we have a problem with XYZ company. You try not to make it personal because that takes it to another level. But it's a lot of folks feel like it's just Elon being Elon. He's one of those larger than life characters who feels maybe he doesn't have to play by some of the rules or even the social norms. So I'm sure Bob Iger will take the high road here. But Elon's to the extent he wants to make X a profitable venture, which is questionable, then losing big advertisers like Disney is not good for the top and bottom line.
No, and it looks like Elon appeared in a series of posts on Thursday today, referring to the box office performance for some of Disney's recent films, saying that Iger drops more bombs than a B-52. That's a quote from Elon Musk there. Interesting.
Yeah, absolutely. All right, we're going to have more coming up. And the S&P 500 up 0.8%. Bloomberg's Beyond the Bell. That starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting it down to the closing bell. Here to help take us beyond the bell. It's a global simulcast, joined right now by Jess Minton and Paul Sweeney, in today for Tim Stenivek and Carol Massar. Welcome to our audiences across all of our Bloomberg platforms. That includes television, radio, Bloomberg Originals, as well as our partnership for those folks streaming on YouTube. Jess, a good day in the markets all around, but particularly good when it comes to the big cap tech stocks.
Yeah, when you look at this, especially communication services, right, leading the way up around 3%
Communication, that's
today.
just tech, right?
So thinking about
it's like discretionary is tech, autos is just tech.
Google, Meta, all that stuff.
Meta, all that stuff, yeah. Well, if you look at Alphabet, though, I mean,
Yes.
it's housed in communication services as well as Meta. And
remember when Alphabet changed its name and everybody said this is the most ridiculous
Google
thing
parent,
It's still
Alphabet.
Yeah.
It's always fun as a reporter to have to put that in my copy, I gotta say, Paul.
You know how long it takes us bankers to come up with these ticker symbols and then they go switch the name of them?
Did you used to do that? Well, I think it's funny, Paul, that they never switched the ticker symbol, right? Shouldn't it be like ABC?
Yeah, true. Very good point.
Although Facebook did change it when it went to Meta.
It did, exactly.
Yeah, and I have a feeling know they're going to change it back at some point, given the way Meta's going, the metaverse. Whatever happened to the metaverse? Did I miss it?
No, he's still investing in it. It's just not as robust, and he's not making such a big deal about it. Just be quiet. He's focusing on cost cuts, and that's worked for the stock.
Yeah, certainly so. And I mean, we should just point out, I mean, we kind of joke about this, but on a day where we're seeing all seven of the Magnificent Seven stocks in the green, but firmly in the green too. I mean, Alphabet up 5% on the day, Meta's up 3%, and Nvidia, of course, which is everybody's darling this year, up more than 2%. Amazon getting a bid as well, Apple and the likes as well, about 60+% of the S&P 500 moving into the green, and that gives us an 0.8% gain on the S&P on this Thursday afternoon. That's higher by about 36 points. The Dow Jones Industrial Average up by 63 points, or about 0.2%, while the NASDAQ, which we were just talking about, up almost 200 points, or about 1.4% on the day. And Jess, let's take a quick look at the Russell 2000, the small caps, higher on the day, but the relative laggard, a bit of a switch from what we've seen in previous days, but higher by 0.9%.
If you look at the number of daily advancers in the S&P 500, up about 63% of them higher. You look at the daily decliners, 37%, Scarlett.
Yeah, and that shows up in the sector performances as well. There's only 5 sectors in the red. Everything else is in the green, led by media and entertainment. So we talk about communication services. You want to slice it a little finer. It's media and entertainment that's leading way, up 3.5%. Chip companies, and that's NVIDIA and AMD, up 2.5%. And autos, Tesla, gaining 1.3%. On the downside, energy, commercial and professional services, and utilities in the red.
Yeah, I'm looking at some of these gainers here, and we've been talking about it's been the big tech names. I just look at my good friends at Google, and I'm going to keep using Google. Apparently, they have an AI offering as well, Gemini, and that's what the market likes to see there. So you got to think of a company with the size and the resources of Google. If there's an AI play, they will find it. And then in the chip space, AMD, the CEO debuts a new chip, again, focusing on AI, and he puts out a really bullish forecast on his expectation for the market for the chips for AI, and that got everybody's attention, and that bid up a lot of anything AI related, and that includes NVIDIA, which had been, and probably still is, the poster child for getting exposure to AI.
Looking at these decliners, Paul, you and I this morning in pre-market, we were talking about Chewy with,
yes,
of course, the one and only Tom Keene. It came well off the session low, so closing about 0.6% lower now, so really paring back some of those losses from this morning. But the stock did drop after the company did cut its guidance for the full year on net sales, so that did miss those consensus estimates. Another stock I'm looking at is Sprinkler, CXM. That's a $3 billion market cap company, but this is an enterprise software company. So if you look at this, dropping 33%, this is its biggest drop on record. It did come after the company did post a stronger quarter that included a top and bottom line beat, but unfortunately, if you look at some of that growth outlook, it did disappoint investors. And then, don't tell Tom Keene I'm bringing this one up, but C3 AI, of course, we talk about some of those AI and either sort of crypto-related stocks, but AI is a ticker symbol on this. But looking at that stock, dropping close to 11%, worst day since September 7th, but this is a data management company, though. If you look at this, though, issued a forecast for an operating loss for the fiscal year.
Yeah, a lot of the AI names down. We should point out a lot of the enterprise software companies moving lower on the day, including Okta and a few others, on the back of additional weak earnings in that enterprise space, and Klaviyo now dropping back below its IPO price once again. Meanwhile, you go to the Treasury market, and the price action was a little bit more muted. Maybe a lot of folks are kind of waiting until tomorrow when we get a jobs report, and next week when we get that big Fed meeting here. But you take a look at the moves across the curve here. Most of the activity you were actually going to find on the shorter end of the curve. That pushed the 2-year yield down just just a bit here, while the rest of the curve did move higher just a little bit here. So the belly out to the long end, a bit cheaper here right at the close.
It definitely feels like we're in a holding pattern right now, waiting for this jobs report. And I'm not sure it's going to clarify all that much, right? I mean, the narrative is pretty much set that the labor market is cooling and inflation, when it comes to wage increases, is going to slow. Of course, it's not going to get to that 3.5% year-over-year number that the Fed is looking for, but it's moving in that direction.
Two interesting things in this report. We're talking the average of estimates based on the Bloomberg survey, 183,000 jobs created. Now, Michael McKee points out that about 33,000 of those jobs are related to the UAW strike. So that puts us more about 150, which is in line where we were last in the previous month. But what I also think is interesting is that nobody really expects the unemployment rate to change, and nobody really expects a material change in the rate of average hourly earnings.
Yeah, well, I think still, we're looking at real average hourly earnings up about 4% year on year on the consensus basis. That's the outlook. That's pretty darn solid out there in a fully employed economy here. So still decent, very strong labor market, and now we're starting to see it again continue in the wages.
Continuing the wages, and it's the definite thinking point here for the Federal Reserve. Just this is going to feed into expectations for inflation, which of course is going to be the next data point for everyone.
That's coming on Tuesday, so we'll have CPI then, and then PPI, producer prices, also a component, and that is trade services, which is a key gauge if you're thinking about what that means for corporate margins on Wednesday ahead of the Fed decision. So we still have a lot of data coming up before 2:30, and obviously when Powell speaks on Wednesday, but then 2 o'clock.
We also got a lot of earnings still hitting the wire, including DocuSign and Lululemon. Let's get right to it. Lululemon shares down here in after hours trading. The headline numbers coming in for the third quarter. EPS at $1.96 a share. Not quite clear the comparison on that just yet, but taking a look at the revenue figures, it does appear to be pretty much in line with estimates, $2.2 billion. The adjusted EPS figure also does look like to be a modest beat. Their forecast for the fourth quarter, here you go. Revenue, a range, $3.14 billion to $3.17 billion. The street was looking for 3.18. So the top end of that range, just a whisper below what the street was looking for here. And the company also saying that for EPS in the fourth quarter, $4.85 to $4.93 a share. The street on average was looking for $4.93. So the top end of that range meets the average estimates here. So not really looking like it's going to be a major beat should those numbers actually come to fruition.
You know what, I'm looking through the release here, and what's interesting and what strikes out at me is this partnership that Lululemon has entered into with Peloton for using its content, its digital fitness content. So it no longer produce its own hardware, which is the mirror that it acquired a number of years ago, but it's going to use Peloton software. I know that it had been looking to sell the mirror, but was not able to find a buyer just yet. So I guess this is the next best move.
I'm actually intrigued by this because remember when they bought that, everyone kind of scratched their head and they say, is this really the direction they want to go? And I guess we now have the answer, Paul.
You know, big on Peloton.
That was on the heels of the pandemic, which made
is Paul. Paul is very big on.
I'm big on the Peloton bike, guys. You don't want to go up against me.
He also has the treadmill, right?
We have the treadmill as well, but I do
you have the mirror?
And I repeat, I do not wear Lululemon when I'm on the bike. So just to get that image out of your mind.
Can I just say, Paul?
I'm shocked.
You might want to change your mind. I was a Lululemon hater, and you know what I did? I was looking for a good golf shirt. I know you're a big golfer. And somebody recommended one of their shirts, and I'll give you the exact name of it off air. This shirt is fantastic, Paul.
All right.
I mean, it is. Whisk. If it starts raining, the droplets just fall off. It's breathable. I'm just like a salesman for it. I'm a believer. Now, that's the only item I own from them, but still, it was very pleasant.
You wear suits every day because of what you do, but if you could dress down, you'd be wearing Lululemon pants as well.
Sorry, from the waist up.
No, we have full body shots on Bloomberg Television. We know that you're wearing a three-piece suit.
Maybe.
No, that's hilarious. But anytime I hear Peloton, I always think of Paul T. Sweeney.
That was a pandemic stock no other, boy.
Yeah, but you stuck to it. Look at you, Paul.
Oh, yeah.
But before we move on, I just want to get, sorry to interrupt, though. We did get some other earnings out of DocuSign, and I just want to point them out because this is one of the biggest movers in after-hours trading right now to the upside. They had a big beat in the most recent quarter. Those 3Q numbers on an adjusted EPS basis, 79 cents versus an estimate of 63 cents here. And the revenue numbers also came in about 10 million above estimates. They gave a full-year forecast of $2.75 billion for full-year revenue here, which would actually top their previous forecast as well as the average on the street.
And of course, we're still waiting for Broadcom to release its results as well after it absorbed VMware.
Okay, yeah, I think we got to go, guys. We should point out RH also crossing the wire. We'll try to break that down for you after the break here, but that net revenue number coming in a little bit light. That does it for our cross-platform coverage of the market close on Bloomberg Television, radio, and YouTube. And just a reminder that Bloomberg Business Week is now on Bloomberg Originals. We'll all be back tomorrow at the same time, same place.
Hey, Mr. Spaceman, won't you please take me along? I won't do anything wrong. Hey,
always the best tunes.
Paul Brennan, the producer here.
I mean,
picking the music today.
Always. They always bring the musical game here. All right, Jess Met and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. We're sitting in for Tim Stenovic and Carol Masser. Let's talk one of the really cool news items of the day. SpaceX tender offer said to boost value to $175 billion. So I guess they're going to be tendering for some of the shares owned by employees. And the tender value, again, implies a valuation of $175 billion. That's a lot for a space company, which is pretty cool. Katie Roof joins us. She's a VC deals reporter for Bloomberg News. She joins us on Zoom from Los Angeles. I know, Katie, you're used to numbers like this out there in in California and LA and Silicon Valley. Talk to us about what SpaceX is doing here and how this is going to work.
Sure. And so this is actually a record for a U.S. private venture-backed company, $175 billion. It's $95 a share for the tender offer. Just 6 months ago, they were valued at $150 billion. A year ago, they were valued at $137 billion. So this is a big increase for an already highly valued company. And it really is bucking the trend because, as we've seen in Silicon Valley the last couple of years, the companies are struggling to maintain their billion-dollar valuation. But people that I talk to are big believers in SpaceX.
So talk to us about sort of the issues moving forward for SpaceX, because they're in a unique situation right now.
Sure. So they have two core businesses. They have their rocket launching business, but they also have Starlink, their internet business that's satellite related. And so a lot of the investors tell me that the reason that they're investing is because they are really bullish on Starlink. It's our understanding, and we've reported that Starlink is eventually going to be spun off of SpaceX and go public someday. And so a lot of the investors are trying to get in on that.
Do either of you know where they launched their rockets from?
No.
Boca Chica, Texas.
Wait, really?
Yes. It's literally, if you go
Boca Chica, Texas.
It's literally the most southern part of Texas. It's like right next to
I feel like I should have known this being from South Texas.
It's unbelievable. I mean, who figures out
got me
Boca
there,
Chica?
Paul.
It's right on the border with Mexico. Apparently, they're building all this infrastructure and they got rockets down there. And
that's amazing.
Yeah, isn't that cool?
Well, I'm going to be down there this weekend.
I think you should
maybe I should swing by and check this out.
Swing by Boca Chica. So, I mean, Katie, how often does it happen that a company will, I guess, give liquidity to its employees that, through these tenders?
So SpaceX does it more often than most. They've been doing it roughly every 6 months recently, but it's really a case-by-case basis with companies. Some companies don't want to do a lot of this because it makes it harder to have investor demand if they want to raise a round for the company, if there are already a lot of shares that have been available on the market. But what SpaceX is doing here is providing an opportunity for employees to go and buy that house, because if they don't sell these shares in a tender, they have to wait for an eventual IPO. Otherwise, their net worth is just on paper. So that this is really to help insiders have some liquidity, and they're able to do this because they have tremendous demand. And it goes without saying, Elon Musk, who is the founder of this business, is a very, very controversial figure. He's recently made statements that have hurt advertisers on X, formerly known as Twitter, but we see still plenty of investor demand for SpaceX.
Hey, Katie, do we know who buys these shares from the employees?
A lot of them are VCs or other high net worth individuals, accredited investors. Could be hedge funds. It could be broad groups of institutional investors, but it's a mix.
That's interesting. So what do you think is sort of the timetable kind of moving forward here as far as how all of this ends up playing out?
Well, our understanding is that they just decided on the price, or they were on the verge of deciding the price when we got a hold of it. So the tender is just getting started. It's just underway. I would imagine that they're going to try to do as much as they can before the holidays, but I'm not sure if it will formally close before the end of the year.
Katie, you're the VC deals reporter. Talk to us about your world these days. Are VC companies getting funded? If I have a really cool idea, can I go to Sand Hill Road and raise some money here? Give us a sense of what the environment is like.
Well, if you're doing an AI-related company, they're all ears, and they'll be writing you checks before you know it. But for everything else, for other than outliers like SpaceX, it's been really slow this year, particularly at the growth stages, which I cover. Sometimes at the seed stages, they're not as concerned about the broader macro environment because VCs tend to invest on a 10-year time horizon, and so they can be bullish about the future. But companies that raised in like 2021 are often considered to be overvalued because the market, you look at tech stocks, they've gone down for the most part considerably since then, and that's affected valuations throughout the whole ecosystem. So right now it's a tough time to be a startup that raised money, that wants more money, but if you're just getting started, sometimes there's room for opportunity still.
For those who don't know, Katie Roof is one of our star reporters here at Bloomberg, constantly breaking news out of Silicon Valley. From your purview being over there and what you were just walking us through, especially on the back of what happened with some of those regional bank issues back in the spring and a lot of those tied to different Silicon Valley banks, what is it like in the mood, in the atmosphere, as far as how things have come and gone over the past 9 months since then?
So there's fewer holiday parties this year.
We were talking about that earlier.
Yes, we were.
Apparently there's a story on the terminal, more pickleball and guac, Katie.
Yeah, so my understanding in talking to some venture firms, there's still some, but some felt that it was a bad look to throw a holiday party this year. You look at their last 2 years where there have been very few IPOs. The M&A is often very disappointing prices, so they're not bringing in a lot of money, and so they felt that it looked bad for some of them to be throwing big splashy events. And Silicon Valley Bank actually used to be the sponsor of a lot of these events. Interestingly, I still see their name on some parties because they're still alive with their new owner, but I would imagine that it's a different scenario than it was 2 years ago.
And are the VC funds, are they still out there fundraising, or is that also kind of slowed down?
Sure. And so I think, again, it's a split between the stages. So the earliest stages, a lot of them have had great returns and have continued to raise new funds for seed stage investing. But what you're seeing is a lot of the crossover funds, the pre-IPO investors really got burned in this market. And so what we're seeing is some of them struggling to raise new funds or raising smaller funds or trying to change their strategy to invest in either the earlier stages of VC or just go back to investing in the public markets if that's what they were doing before.
Yeah, interesting. It's just a tough time. I think people are just uncertain. I'm just looking at the NASDAQ, still 10% off of the high. So if you're valuation sensitive, that kind of number kind of gets your attention there. Katie Roof, thanks so much for joining us. Katie Roof, VC deals reporter for Bloomberg News, joining us on Zoom from the awesome office for Bloomberg in
I've heard
Los
about
Angeles.
This. I gotta go visit sometime soon.
Yeah, looking very cool. It's out there in Century City, nice part of town there, overlooking Bel Air Country Club, I believe, is the one kind of splashy. It's what you would expect from Bloomberg News in LA.
I'm still thinking about what you told me about South Texas, where the launch
Boca Chica, we'll go.
So I'm gonna be down in South Texas this weekend officiating a wedding. So
I don't know how you get there.
I'll figure it out.
Yeah, fly into Houston and then I think you drive. And you just keep driving. All right, we're gonna have more coming up. The S&P 500 ended up the day up 0.8%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings after the close of trading. Keeping an eye on Broadcom. It reported adjusted EPS for the fourth quarter that beat the average analyst estimate. After ours, we do see shares of Broadcom trading lower, down now by 2%. Lululemon Athletica reporting guidance for the fourth quarter that fell short of expectations, disappointing investors who have grown accustomed to many quarters of better-than-forecast results from the activewear retailer. Sales growth, while in line with forecasts, continued to slow from a high in 2022. Right now, we've got Lululemon after hours down by about 3.6%. Also reporting earnings after the close of trading, RH, the old Restoration Hardware, third quarter net revenue, $751.2 million. Estimates, $756.4 million. After hours, RH shares, they are trading lower now by 5.3%. An update for the Dow, the S&P and NASDAQ. S&P up 36, higher by about 0.8%. The Dow up 63, up 0.2%. NASDAQ holding on to a gain of 193 points today, up by about 1.4%. Small cap shares also advanced with the Russell 2000 up by 0.9%. 10-year yield 4.14%. That 2-year 4.58%. Spot gold up $3 the ounce to $20.28, up 0.2%. West Texas Intermediate crude up 0.4%, $69.66 a barrel. And briefly today, also keeping an eye on Bitcoin, down 1.1%, 43,338 on Bitcoin. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Paul Sweeney here in the Bloomberg Interactive Broker Studio, in for Carol Master and Tim Stenovic. Paul, our next guests, I mean, really don't need any introduction.
I mean, which one here doesn't belong? Let's just put it of these four in the studio. I mean, I'll leave and just go get a ham sandwich.
Yeah, get out of here, Paul.
Yeah,
no, we're kidding. We love you. But Alexandra Simonova, equities reporter at Bloomberg News, as well as Elena Popina, another equities reporter at Bloomberg News, 2-star reporters for our U.S. equities
You're
team.
two good times,
I would have to say. We're basically taking over while Carol and Tim are out today. But so many different things to talk about. I know, Paul, though, especially when you're thinking about strategy and how wrong strategists were coming into 2023, which they do have a track record, unfortunately, of sometimes not getting it right. But a lot of them were thinking the S&P 500 on aggregate, the median, would end the year at 4,000 coming into this year. You look at where the S&P 500 is, above 4,500. So some people got it wrong. So who better to talk about it than Alex, who covers U.S. strategy? What is your take as far as what the consensus is going into 2024 now that so many people got it wrong?
Yeah, well, first of all, it's so great to be here with this dream team. I'm very excited to join you guys. I think it's really interesting looking at 2024. There's such a wide dispersion of different outlooks because you do have some people who are calling for all-time highs. Bank of America, Deutsche Bank, BMO Capital Markets are some of the names who see the S&P 500 hitting at least 5,000 by the end of next year. But then on the other hand, you have JP Morgan and Chase, which sees it falling to 4,200. There are a few other people who still are hesitating to call for all-time highs on the S&P. David Kostin sees it flirting with its previous record, but not getting quite there. So the average now that we're tracking here at Bloomberg is about just above 4,700, which is not a very substantial upside. Historically, they're usually projecting about a 10% gain, still very conservative. So there's this hesitation among strategists to make that turn from, after getting it wrong this year.
Yeah. Elena, you've got a great story in today. It talks about something I wasn't really aware of. Long-short quality trade wipes out its 2023 rally. What is a long-short trade?
That's basically a pretty simple strategy. You buy stocks with the highest quality, and the lowest amount of debt. Your, stars of, FANG stocks, your high quality companies, and you short simultaneously at the same time stocks with the lowest quality, the highest amount of debt, the lowest fundamentals. So that trade is now down for the year with just 3 weeks to go in 2023, and that's because of the recent rally in some of the, shadiest corners of the market. Your small caps that are highly highly indebted. Yeah, your stocks with the highest short interest are going really staging quite a bit of a rebound right now because of the general risk-on sentiment.
So what does positioning look like heading into next week when you have CPI on Tuesday, the Fed decision on Wednesday?
And retail sales also.
Yes, oh yeah, that's right.
Busy final week.
Yeah, so a lot of risk is centered around next week, as you just pointed out. We have a few data points, and expectation for volatility is really elevated compared to the expectation of volatility in 2 weeks. Now, that is the opposite to what's historically the case, right? You know, the further out you go, the higher your volatility expectations are right now. And that's because traders are getting really, really worried about what Jay Powell is going to talk about on Wednesday, about what the CPI data is going to be like on Tuesday. So they are building protection around that week, and after that it's going to be all holiday season shopping and just cheering the New Year's.
I will be here working between Christmas and New Year's.
I'll be
But
around.
You will.
I think all of
be
us
here.
will.
All right, very good. I thought it was just going to be me and Carl
Also,
Master.
his eyes lit up. He was like, people in office in the holidays?
Hey, Alex, one of my favorite strategists, because he's very optimistic and very bullish, and he's generally right, is Tom Lee.
Yeah.
I worked with Tom back in the day at Salomon Brothers when he was covering the what we called the cellular telephone business at the time, and boy, he killed it there. And then he morphed into the strategist, and he's had a great career on Wall Street as a strategist. What's he saying these days? I'm guessing he's bullish.
So Tom today came out with his forecast for next year, 5,200 on the S&P 500. That's now the highest among those we track. And what's interesting about the bulls versus bears debate is that, you know, a lot of the time bulls are vilified for having calls that are way too lofty. But this year was the first time in a long time that they actually got their bullishness right compared to a lot of the bears who projected doom and gloom scenarios that just didn't play out. S&P on pace to return double-digit gains this year. A lot of people were really wrong, and people like Tom Lee, Brian Belsky over at BMO Capital Markets, Binky Chada at Deutsche Bank, they all called this advance last year.
You know, when I was at Salomon Brothers, our strategist, this was in the late 90s, markets are ripping. He was bearish. The only one, he got on the cover of like Business Week as the only bearish strategist left on Wall Street. And then we were bought by Travelers, which owned Smith Barney. Smith Barney also had a good strategist who was very bullish. So when those two companies merged, guess who got the job? It wasn't my guy from Salomon Brothers. So anyway, it's risky
It
to
takes
be
a lot of
negative.
guts to have a call that's
Yes,
out of
as a
conviction.
strategist, it's tough to be.
Right. And how do you break away from the pack?
Yeah.
Right?
Yeah. So it's just. And now he's a professor of accounting at Baruch.
Ooh, okay, there you go. So, Elena, walk us through the VIX. Everybody constantly talks about the lack of volatility. You cover this so closely in our options market. You do it the best here at Bloomberg. What's the deal here?
So the VIX hasn't moved much over the past few months. It's been quite anemic, to be honest. It's hovering near the 14, 15, 16 handle. It's really far from the level that signals anxiety or some panic hedging. If we look at the put demand and demand for protection on the downside, it's not really going anywhere right now. And that's because a lot of people want to catch up with that year-end rally. Books are going to close in 3 weeks. They better post really good returns because that's how they're going to be judged by. They're going to worry about risks later, so it doesn't mean that people think that we will rally through the roof. It's just they are waiting for the best time to put on those hedges, because when you buy protection and stocks just keep on rallying, you pay for something you don't necessarily need.
Right, so a lot of them got burned, especially people who would have been super bearish coming into this year, and that was the best first half. For the NASDAQ 100, probably since like the dot-com bubble.
Right.
So I'm sure a lot of people got burned by that.
Right, and they do several strategies. It's not that they don't hedge at all. They buy individual stocks and short the index, or they do the opposite. They buy out of the money, put spread collars or things like that. They're really sophisticated ways to kind of get some protection, but not necessarily the VIX. So the VIX as a fear gauge, it's something that gets a lot of attention and clicks, that fear gauge description, but it's not really a fear gauge anymore. It's just a level of expectation of 30-day out volatility, and in the next 30 days, we're not necessarily going to see a lot of anxiety.
Hey, Alex, we just had a ripping move up in the market in November, up at 8.9%, I think it was in the S&P 500.
Yeah.
Are any of the strategists or anybody on Wall Street saying this is an overvalued market now? Are people, ringing the concern bell that, we're overvalued, we're too far in valuation?
I haven't heard anything near term because I think most of them were trying to prepare for 2024. What's interesting, though, is that the market has been so topsy-turvy for them. So many of the people who had flipped in the summertime, then seen that 3-month slump happen, I think they were worried at that point to change their call yet again, and we're just waiting for the rest of the year to play out before making any projections.
Like active fund managers, I know that Elena covers really closely, who were wrongly positioned and now trying to catch up, especially for those large caps, right?
Right, they didn't have enough risk in November, and some of the riskiest parts of the stock market ripped. Your profitless tech companies, the ARK ETF, it had its best month ever.
ARK, best month ever. Right? Yes. Yeah, Elena was covering it.
You don't buy enough of it, you miss out. So the stakes are really high.
I tell you, for you can say what you want about her, but she sticks with her convictions.
Right.
She's disruptive, whatever that language is, and through thick or thin in 2022 was thin, but I guess she's coming back. And I mean, it's up 54% year to date, the ETF. So, all right, not too bad. All right, guys.
It's been fun.
Yeah. Alexander Semenova and Ellen Popina, they are the part of your equities mafia team, right?
Yes, we have a beast of an equities team over there in the
absolutely.
newsroom.
Stay on top of the markets
Two of
for
our
us.
star reporters there.
Exactly. We appreciate that. Good having both you guys in here in our Bloomberg Interactive Broker Studio. Again, a good day for the market. I'll point out the volume on the NASDAQ was like 35% or 30% above the average. So pretty good day. Yeah. Right now, let's get world and national news. And who do we do that with today?
Nancy Lyons.
Nancy Lyons down in Washington, D.C. Let's do that.
Thanks, Paul. The U.S. is taking steps to increase security in the Red Sea to counter recent Houthi drone attacks.
The Departments of State and Defense are leading a coordinated effort to strengthen and expand the 39-member Combined Maritime Forces. That's a multinational maritime partnership which exists to counter illicit non-state actors in international waters. Everything from just basic maritime security to anti-piracy and trafficking.
National Security Council spokesman John Kirby says they're encouraging other countries to become part of this alliance. Kirby says the U.S. believes the Iranian government is enabling the Houthis to attack ships at sea, including at least one U.S. warship that downed a Houthi drone over the weekend. Israel is acknowledging its goal of destroying Hamas in the Gaza Strip will take months. Bloomberg senior reporter Anthony Squizine has been speaking with an engineer with Israel's military. He explains how complicated the process has been to destroy the underground tunnels built by Hamas.
What he told us is it's a massive job. It's going to take many, many months. And the unfortunate consequence is that towns like Beit Hanun, where he's working in northern Gaza, are basically unlivable, virtually destroyed.
Bloomberg's Anthony Squizine says the military leaders he's spoken with are saying what they're doing is not beautiful, but it's necessary. A major sports acquisition appears to be in the works. David Rubenstein, Carlyle Group co-founder and co-host of Bloomberg's David Rubenstein Show, Peer-to-Peer Conversations, is said to be in talks to acquire the Baltimore Orioles Major League Baseball franchise. Those with knowledge of the matter say Rubenstein, who is a native of Baltimore, is among the suitors pursuing a transaction. The team is currently owned by trial lawyer Peter Angelos. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. We are keeping an eye on Broadcom shares after ours. Stock is lower now by just about 2.1%. Broadcom reported adjusted EPS for the fourth quarter that beat the average analyst estimate. Also reporting after the close of trading, Lululemon Athletic reported guidance for the fourth quarter that fell short of expectations, disappointing investors who have grown accustomed to many quarters of better than forecast results from the activewear retailer. After ours, we got Lululemon trading lower now by 3.5%. RH, the houseware, the home improvement, the housing retailer, home furnishings, I should say, lower after ours by 8.1%. Turned out to be an up day for the Dow, the S&P, and NASDAQ. S&P up 36, gain there of 0.8%. S&P at 45.85. The Dow today up 63 points, gain there of just about 0.2%. NASDAQ up 193, up by 1.4%. 10-year 4.14%, with a 2-year that's yielding 4.59%. Spot gold up $3 the ounce to $20.28, now up 0.2%, and crude up 0.4%, $69.63 a barrel. As for the overall market backdrop, Christoph Gleisch is president and chief investment officer at Harbor Advisors, and he was a guest right here on Bloomberg Business Week.
I think valuations here, I'd probably say fair. And so we would recommend having a good allocation to equities for investors that are ultimately investing for the long term. Of course, it's a market of many different regions, many different market capitalization. I think there are areas of the market that are looking pretty cheap right now.
Namely small cap shares, he says. You can hear more of the conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcast. JetBlue boosting its full-year financial outlook. The stock today flying higher by 15.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Jess Minton and Paul Sweeney here in the Bloomberg Interactive Brokers Studio, filling in for Carol Masser and Tim Stinovic, who do have the day off. Paul, I'm very excited about our next guest, Max Abelson, TV star. Also, right now, he is the host of the Business Week show. It's really fascinating, and I love tuning in on this. And the latest episode is about ownership. Max is actually here in the Bloomberg Interactive Broker Studio with us. Talk to us about ownership. How did you come up with this? What is this episode going to be about?
Well, thanks so much for having me on. I don't think of myself as a TV star, but I'll still take it. I mean, Bloomberg has to be the only media company in the whole world that would be willing to have a late night talk show episode whose theme was ownership. And I know that potentially our listeners might worry that it might be potentially boring, but it's a riveting episode of television, if I may say so. Even though I'm the host, we've got a couple of guests who are such interesting people in such different ways. But I want to talk about Pinky Cole, who has had a really difficult life. Her father was sentenced to prison, I think several decades of prison, on the very day she was born. She had a small restaurant in Harlem that burned down, I think, because of a grease fire not that long ago. Like, I want to say maybe less than a decade ago. And she had no fire insurance. She lost her apartment. Her car was taken away. All of her savings was practically gone. And she started a fast food chain called Slutty Vegan. And it's now worth a reported $100 million.
Wow.
And she typifies, I think, what it means to be a certain kind of owner. And she had so much to say about it. And I feel like I learned a lot listening to her.
So what does she say about ownership, working for yourself as opposed to, I've always been a salary man, and that's just my risk profile.
Me too.
I don't have that gene that has that entrepreneurial gene. What does she say about ownership and kind of going out on her own?
Okay, so she had full equity in her business until really recently, when she sold stakes to two investors. One of them that you and I talked about earlier, Danny Meyer, who founded Shake Shack and other amazing restaurants. And she told me on the episode that the day that she sold these stakes, she wept. And she cried because she felt that she had put everything that she had into these restaurants, and she couldn't believe that that now co-owners were going to be people who aren't working in the kitchen and they don't put anything into the business. And she talked about a certain kind of trauma that kind of pushes her to not want to share what she has with other people because her life has been so hard. And she said that she realized that if she really wants to thrive, it will mean bringing other people into her ownership group and getting over the part of her that wants to cry when she sells ownership stakes, and instead bringing on investors like Danny Meyer. And I think that Danny was one of the several reasons, although Pinky's really the main reason, that she is going to grow. I think she has a really big shot at growing a really, really significant American business.
What particular challenges has she gone through when you're starting a business like that from the ground up in an environment, especially given the aftermath of COVID and all of that? It must have been really difficult for her and other businesses in that type of situation.
Well, one thing we talked about is that there are two extremely fraught relationships that owners have. One is with their investors, who are in some ways above them, and the other one is with their workers, who are in some abstract sense below them. And I think not once but twice, I think a worker or groups of workers have sued Slutty Vegan. And she described this feeling of like having, I think there was like a 10-page New Yorker story. She was on the cover, I believe it was of Essence magazine. And the very next day, there were these huge stories about these lawsuits against her company and I think maybe against her too. And she described just having to learn how to deal with it.
All right, I think we have some sound from your show, Max. Pinky Cole, on how she persevered through a difficult life to become a success.
Your new memoir, I Hope You Fail, is based on the idea that failing isn't like the enemy of ownership or its opposite, but a key part of it. Why?
It's interesting when we think about failure, for me anyway, I've been through a lot. My father served 22 years in prison. I grew up in a single-parent household. Car got repoed, lost my business, almost lost my mind, had enough bad relationships that I can't even count, right? But I needed all those things to happen for me so that I can realize what was on the other side. And what was on the other side was building a multi-million-dollar business, creating Slutty Vegan when I had no idea what I was doing as an entrepreneur, becoming a wife and becoming a mother when a doctor told me that I couldn't even have kids. So when we think about failure, it really is just re-engineering a negative mindset. And that's why I wrote the book. I wanted people to know that, okay, it's inevitable. Life is going to happen, but it's what you do with what happens in life is what makes the difference. And I know that it's going to bless a lot of people.
All right.
Wow, the perseverance
exactly.
that she has. Amazing.
See, that's why it's good that on the show, at least, probably not here in this radio interview, but at least on the show, I try to keep my mouth shut. And because I feel like Pinky Cole is so much more interesting than I am. She has so much more to say. I love the way she talks. I feel like she is able to be honest and funny.
Raw.
I mean, the title of her company is funny. I mean, she's very tongue-in-cheek, and I'm hoping that if we make a second season of the show, I'll be even quieter and let our guests talk for even longer.
What's the future of her company? What does she want to do over the next several years?
She was like, listen, food is just the way to get our foot in the door. Like, we're going to be a branding empire. She already has a big tie-in with a lipstick company, with a shoe company. I can imagine Slutty Vegan sort of becoming like a major global brand. I mean, listen, to be real, there's a difference between a $100 million company and a $100 billion company. But she certainly has a kind of joie de vivre and a certain magnetism that I think consumers respond to. And as an interviewer, I mean, I responded to.
Man, everybody needs to catch this latest episode of the Business Week show tonight at 10:30 p.m. Wall Street time on Bloomberg Television. So don't miss out. Got to tune into that later on, Paul.
The Business Week show is the world's first late-night TV talk show about pop business. That's money, power, and culture. Bloomberg Business Week contributor Max Abelson goes deep with his guests about the profound and complicated themes that make business and life so interesting. So again, you can check that out, the Bloomberg Business Week show tonight, 10:30 p.m. Wall Street time on Bloomberg Television. Probably all on all the social.
Yes, all the things that we have.
The digital stuff.
Right.
It is.
It's all over. So this is episode 7 of 10.
I can't believe it. 7 of 10. We got 3 episodes left.
Flying by.
The final ones are good too. Listen, we're starting out. We're making this up as we're going along. We're learning the ropes here. We're learning the ropes, so it better be getting better as we go on.
Very good. All right, Max, thanks so much for joining us there. Looking at, again, these markets, it was a strong day for those just paying attention here to these markets. The day we ended up S&P up 0.8%, NASDAQ up 1.4%, so the tech's leading the way here. And on good volume, by the way, the NASDAQ volume was about 30% above the 30-day average, so good movement on good volume. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Sources tell Bloomberg Tesla's Dojo supercomputer project lead Ganesh Venkataraman has left the company. He has led the Dojo project for the last 5 years. Sources say he departed the EV maker last month. Peter Bannon, a former Apple executive and director at Tesla for the last 7 years, is now leading the project. We've got Tesla up by 1.4%. UAW says it signed up more than 1,000 employees at Volkswagen's non-union Tennessee auto plant in Chattanooga, setting up a high-stakes showdown at a site where the union suffered painful past defeats. GameStop is out with an unusual plan for its roughly $900 million in cash and equivalents, and that is allow its billionaire CEO to buy stocks of other companies. GameStop advanced today after earnings, as we hear from Bloomberg's Tom Busby.
Charlie, the Grapevine, Texas-based company posted sales of $1.08 billion in its fiscal third quarter. That's a 9% decline from the same period a year ago. Analysts were projecting $1.18 billion based on estimates compiled by Bloomberg. Now, sales fell in all three of GameStop's major categories: software, hardware, and collectibles. The company struggling to find its footing after the bulk of video game sales shifted to digital marketplaces. GameStop has closed over 1,000 stores in recent years. Charlie?
And that's Tom Busby reporting. Today we saw GameStop shares rally by 10.2%. And those are some of the top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Jess Minton and Paul Sweeney here in the Bloomberg Interactive Broker Studio, in for Carol Masser and Tim Stenivek. We'll have more coming up. First, let's get a check on the latest world and national news from Nancy Lyons in Washington, D.C. Nance.
Thanks, Jess. A lawyer for Donald Trump in his civil fraud trial says New York's Attorney General is terrified of an expert witness. Bloomberg's Steve Rappaport has more on today's testimony.
The defense called Eli Bartoff to refute the state's narrative that the former president duped Deutsche Bank by inflating his wealth to secure better terms for loans. The accounting professor testified the bank would have done its own analysis of Trump's net worth before lending him hundreds of millions of dollars rather than take his financial statements at face value. Attorney General Letitia James argues even if Deutsche Bank executives don't think the firm was a victim, what Trump allegedly did still amounts to fraud. In New York, Steve Rappaport, Bloomberg Radio.
Former President Trump was in court today and is set to take the stand for a second time on Monday. A Texas judge is allowing a pregnant woman carrying a fetus with a fatal diagnosis to have an abortion. Molly Duane, a senior lawyer for the Center for Reproductive Rights, represented Kate Cox in the challenge to the state's strict abortion ban.
I want to emphasize how unforgivable it is that Kate had to beg for health care in court. No one should have to do this, and the reality is that 99% of people cannot.
Again, attorney Molly Duane. Doctors told Cox, who's 20 weeks pregnant, her baby would likely be stillborn or live for a week at the most. Inducing labor would carry a risk of a uterine rupture because of her prior cesarean sections. The state could appeal today's decision. David Rubenstein, the chairman of the Carlyle Group and host of Bloomberg's David Rubenstein Show, Peer-to-Peer Conversations, is in advanced talks to purchase the Baltimore Orioles. Those familiar with the situation say the talks are preliminary and could fall apart. Rubenstein is a Baltimore native and would likely keep the team in the city after years of relocation rumors. The team is currently owned by the Angelos family. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Jess and Paul.
Thank you, Nancy. We appreciate it. Paul, looking at this story in the terminal that you sent over, NYC gets hundreds of apartments in former downtown office tower. We know how challenging it's been for especially coming out of the pandemic. And I actually was down in the financial district recently.
Well, the kids call it FIDI.
FIDI. The kids do say that. So maybe I should start calling it that. FIDI. But looking at this, though, New York's financial district gaining hundreds of new rental apartments in a former office tower with East River views, Paul.
Yep. Leasing begins Friday at Pearl House, where developer Van Barton Group is transforming a 1970s-era building near the South Street Seaport. Boy, I got some stories from the South Street Seaport in the late 80s. Into 588 luxury apartments. Rents at the property with amenities including a bowling alley and hyperbaric oxygen therapy chamber. Oh, jeez. Start at $3,500